Okay, we need to close some programs here. Too much going on. Chill it out. Good morning. Good morning. How are you today? Pam Alala. Interesting name. Good. That's good. Yeah, it's not really unexpected, but we had talked about it yesterday. I don't really have a lot to say about it other than like it is where I kind of expected it to be based on yesterday's price action. It was not particularly bullish, so it was kind of bearish. But if you didn't catch it yesterday, then it would be maybe a surprise that it dropped. When I came on, we spent maybe like 30 minutes talking about AMC, and I just sort of summarized that I thought it was... It just didn't look that good, so... I don't know. Sometimes you just kind of got to take the chart for what it's doing, and it didn't cross up yesterday. That was kind of the last... In my mind, like... I call them the cat ears, right? But it's like that movement of the double M shape. So there's the first M, which is supposed to push resistance and set it up. The second M should jump it. If the second M doesn't jump it, then there's a problem. And then when you have a combination of the first M, which created a weakness, and then the second M, which doesn't jump, it's a pretty surefire recipe for downside. Unless it's like a fake out, but you really can't predict fake outs. I mean, as much as people might want to say they're going to think it's do this or that, and I've done it before. Like I'll say, I think it might even head fake or do something like that. So this is wholly expected because of this motion right here on Tuesday. Unfortunately, right, it had that drop and it went lower than the previous bottom, and then a failure to jump up over the ice. It's a pretty simple, surefire kind of setup. So now we're just going to see how far down we go. I mean, it's that simple. In theory, this could be it. This could be the bottom. It doesn't have to go low. I had sort of said that 265 and 270 would be the likely targets yesterday. So that's where we are. And I'm not really surprised by that. It's not not really even a thing, to be honest. There is some, maybe silver lining to some of this, but I think most of it is fairly straightforward. Like as soon as we crossed up over this 270 mark right here, it's been selling off. And that seemed very obvious when we mapped it out yesterday with the shapes. It's like there was a roundness here on these bounces, and then here, as soon as you started buying up, it was like it just didn't want to go anywhere. And it was as if the operators just were not participating, which is another kind of sign to me that they're just letting it go. Like they're kind of letting it prop itself up. And it wasn't really about the motion itself. Like up is up, down is down. It's about what's going on maybe underlying the stock. And I was trying to stress that in our Discord group. And there's always people that kind of disagree, and there's people that agree, and blah, 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 blah. And that's fine. That's the whole reason we have a group, because it's not a vacuum. But oh, there's some kind of crazy. That's weird. Boy, you got some heated. I'm gonna type this up real quick, and I'll get back to it. So there was a comment in our Discord group from Bareller that said that the AMC and GME have absolutely nothing in common, and he was replying to this idea that I put out. I said if GME gets to this target, and AMC is dead, we might be in trouble. They've decoupled a lot, so who knows? And what I meant by that was that they're not really moving together. So I'm not really sure where, but there's this idea that when they move big, they often do move together. And I think that correlation is there. It would be really difficult to argue the opposite. As companies, they don't have a lot in common. And as charts, they're very unique. Very unique. So I think it's that simple. It's really strange. That's a strange. So I thought that was a really odd. This is a very like heated comment. He's like angry or something. I'm not really sure why he's angry. Because then he went on to say something like, because he's basically saying like the TA is in question. It's clearly contradictory with all your TA. I don't see it as contradictory. So I'm not really sure. And he says the only thing that will move AMC is box office support, bigger numbers, more patrons, unless HYMC starts mining or whatever. I don't, and they can rapidly clear debt. I mean, that's a fundamental argument. So there's no basket. Nobody can tell what AMC is going to do. This just sounds like somebody who's kind of frustrated with my TA. So I don't know. That's what it sounds like to me. I don't think it's that complicated. I mean, if you look at the two side by side and you look at the major upswings, they often happen at the same time. If you use the charts distinctly, they do not chart the same. But timing wise, they often do move together. So I think it's silly to say that they're somehow in a basket and like they're always going to move together. That's not true. But I've said as much as that on stream. So I'm not really sure where the argument is. It just sounds like somebody who's kind of sick of AMC. To me. Which is fine. If you're sick of it, you're sick of it. It happens. But maybe we don't need to like get angry at a random I mean, it's really weird to me that there's something stood out. He just really wanted to call me out on it or something. But I'm not really sure what he's calling out. And there is, in fact, a basket. Like, it's called the small cap ETF. So, like, the idea that they're not somehow in a basket is actually blatantly false. They are. I forgot to mention that. Yes and no, but they are correlated. whatever. I don't know. So one of the things I had talked about with GME and AMC was their correlation in. I'm sorry for being sort of distracted. I'm not sick or depressed. I'm talking to somebody on Discord, so my attention was sort of divided. So first of all, the comment was about GME and AMC. Are they joined at the hip? And my general thought is that they're not. But it's important to note that when you look at overall price movement, there's two, and they are contradictory statements in some ways. So I will admit that, because you're saying they are and they aren't. So it's like if you have, let's say you have like a finish line, you have a beginning and an end. And to some degree, okay, well, metaphorically, we're going to talk about this beginning and end. The way that I see GME and AMC is that oftentimes the beginning and the end are in really similar spots, and that they tend to move in junction with each other there. But they don't share the same beginning and end, if that makes sense, like in a physical sense. Like they're not going to the same place and the same speed at the same time. They're doing it relative to themselves. But this idea that they're not coupled at all, I think that's actually kind of false. I don't know if it's because of ETFs, specifically like the Russell 2K that they're in that basket or whatever. But the idea that they aren't at all in sync is actually kind of wrong, because not only did we see that with some of the major moves, and that's what I'm trying to say is like the idea that, well, AMC's been going down for 3 years, GME's held up. Well, yeah, naturally. But if you look at the inflection points, the points that matter the most, those points are actually quite in sync with one another. They don't appear at first necessarily to be the same thing because they're not moving always in the same direction. But I think that's more of a commentary. What we're really saying is it's more of a commentary on the strength of the stock. The strength of the stock is very different, in my opinion, than like maybe the algorithmic components of it. And some of you might not agree with that, and I'm okay with you not agreeing with that. But I think there's definitely a correlation. Remember when we talked about the setup and how this had built to the upside here? And we talked specifically about this like November 7th area and January area, and how this has been like positioned in an upward wave. That's exactly the same thing we see to some degree in the AMC setup, but it's just downward. And it's the same, but it's like the same timing, which is strange. So you go back to like those regions that we're just talking about, and it's like the November and January regions, and it's still there. Like there's still a waveform there. So the sense is not like right here. This is like November 11th right here. Like I have it already on the chart. This is a critical point going down into this January breakdown. This is the marker that we have for that creek, and it's directionally telling you like right here. So if you're looking for like an actionable, like here's what I mean when I say that they're kind of linked, this is really what I'm talking about, is this idea that like this direction has followed through. You see that? Like it's clearly followed through. And that's not any different than what we see here. It's just that the direction is different. But the timing of those moves is like exactly the same. So I can't not see that correlation. So if you're asking me if it's a contradictory statement to say they don't move together and they do move together, well, yeah, naturally. It's like saying a jumbo shrimp, right? It's like it's clearly like a word that's kind of against itself. You're speaking against yourself, but it's also not untrue. It's a little bit of a paradox, but only if you don't understand what I'm talking about with the TA. So I don't think it's really fair to, I don't really think it's fair to say that like I'm just contradicting, therefore it's all got to be thrown out or something, and that you don't have a grasp on maybe you don't have as strong of a grasp on the market because you're thinking that they run together and that's a really elementary thing or something to think. That's not really the case. This triangulation is what I'm looking at right here. And I think it's poised to follow through. I don't know if it will necessarily. That's not a given, but it's poised to follow through. I mean, we were talking about this back when it was at $21. This is not a new thing. We had talked about this upward wave. I have it drawn on the chart. It's this blue wave right here. We were talking about this way back. And we likewise were talking about the potential for this wave right here way back. Now, this one doesn't seem very even, does it, at all? And I would agree, it doesn't seem very even. But like the concept there is very much the same, in my opinion. So I'm not of a mindset right here that this is somehow like highly contradictory. I don't think it is. I disagree with that notion because you're not saying that they're moving together like up is up and down is down, but you are saying that the setups are very similar, and they are. I'm sorry, they just are. And that tells me like directionally they don't really want them to move the same all the time. But that's also like wave analysis. The waves are clearly like set up in a very similar manner. But if you just say that without showing it, it's really difficult to accept that. It would be like saying again that you think that there's always a beginning and an end and that they have the same timing at the beginning and end, but you're seeing the result, which is like, well, the end for GME is high and the end for AMC is low. They're not the same. And it's like, yeah, I know, I get that, but trust me, bro. That's kind of where I'm coming from. I actually don't think they're that decoupled. I think they're decoupled in the sense of like this ran up and finished this wave, but AMC does not run up and finish the wave. Then in that sense, they are decoupled, right? And the fact that this built out a larger wave structure, interestingly, right? I don't think it's lost on me because there's a sense in which like right here, this is from November. It's really interesting too, because this actually finished to some degree, finished that wave on time. When we first looked at it, we were looking at November 11th, I think, through like January, I don't know, mid-January right here. And this wave actually finished. It completed right here with this pop. And there's still potential that it's going to come back up because there's a longer build out to it. So I would have maybe even argued that if you had built this down smaller, it could have worked much the same. You probably can't see a lot on this chart anyways. It's kind of a mess right now, but I've got like too many lines on it. But this is I know, I do. But this is one that I'm like, that's clearly evident. And that was partly why I thought this was going to come back up. Because both of these ideas right here, there's a double wave. Like 1 and 2 were both going up. This is the place where you have contesting because now this wave goes up, but this wave goes down. So like when they were in sync with each other, down, down, you get this double down motion right here. 1 and 2 are going down, but then they turn and then there's oddly like a 1 and a 2. It's like they went both twice. Really strange, right? So if you look back at that kind of stuff, and it's like, that to me was pretty textbook, like cool. Like that's really cool. And then you can see the motion here in the wave as well. It's just really neat to see that happen. AMC was trickier in that regard because we looked at the same dates and they're there, but it doesn't have, obviously on the whole, you're having a different directional input. So you clearly have down. And I don't see that as contradictory with the idea that this is iterative. To me, that's not a contradiction at all. To say that they are kind of moving in a waveform in a similar way, but that they're also doing their own thing. That's not contradictory either. Again, it's like two runners running the same race. They're not the same person. They're going to take breaks at different times. You know what I mean? But the idea is that they are hitting certain checkpoints according to their own pace. And I think that's really important. So anyways, I don't know. I'm not gonna go further into that right now. I just want to point out that I just want to point out that the correlation that I'm talking about is not up, up, down, down kind of thing. It's more about these important inflection points. And again, look at where this build out has gone. So since November, this hits a peak, right? And it does actually come back up in February. So we know that that did happen right here. So there is a rotation here that happened. There is a waveform that happened. It's not the prettiest thing, again, because AMC was kind of slumbering down and going through more distribution phase. But there is kind of a buy-in period that then results in a sell-off and then a wraparound. And you can see that motion as completely disconnected from GME. But I can't help but see that very similar motion right here. Again, timing is a little different. This is March 26th. This is February 18th, but then the breakdown, the second breakdown's on March 26th. And if you look at this as like all one part of a wave, it actually makes perfect sense. You can't do that. Yes, you can, because if this is a wave top, but it's going on weakness, then that actually makes perfect sense to me. Maybe it doesn't make sense to you, but I mean, that to me is an M top. It's just slumping really bad. So I don't see them as disconnected in that regard. I think this is all like continuous flow. And when you look at it that way, and you look at it in terms of waves in that direction, this actually doesn't seem very complex at all, because there's quite a bit of continuity there in the ups and downs. And I think that's the connection that I would mostly make with GME and AMC. And that's it. I would not go much further than that, because you have to then look at the stocks individually. Because again, this directional input on this wave is different. And by the way, I don't do this all the time, but this is absolutely like proof in the pudding kind of for that idea of waveform tops and waveform bottoms really developing in the way that we would expect them to develop, which is that the lows here, these tangents here, do point towards, the next tops on the waves. They're just not super highly regular. This is one of those theories that we've talked about for quite some time, and it's a difficult one to prove when you're in a downtrend like this. There's not like a regularity to some of the waveforms, but I think it's there. I think that cross up, absolutely, that's exactly what I think about when I think about this idea of like jumping wave theories. And we knew this was probably going to happen back here. We had surmised that it might come even higher. To like that time, I said maybe it comes up to about 4, and it did not. So I thought maybe it'd pump even higher, just using like what trends I had. But that was just a misstep, right? So I don't know. I don't see this as completely and totally disjointed. And then in addition to that, when you look at where we are now, that's pretty darn significant that after that, this is really compressed. I think there is a shrinking of the wave here, because if this is a wave top and this is a wave bottom, then it's definitely shortening to some degree, right? We would have to say that. Or at the very least, this wave bottom, again, is kind of edging out away from, you could say it was edging out away from the core of this wave. And I think that's appropriate as well. But we see the same thing with GME. That's what I'm trying to say. And oddly enough, this idea that we're at this point where we might pump and then dump, that's exactly the same as we're talking about here. It's like we're at this point where it's got like 2 different directions pulling on it. And the same thing applies to AMC with the 2 different directions, because it's at the end of like this cat ear. So I don't think they're as different in that regard. I just don't. I think the difference is like whether this breaks with an M cross up versus down, and then that's the same thing possible here, M cross up, right, which would give you a big squeeze motion versus down, and we're talking about the same thing. So I don't agree that they're completely disconnected. There's an odd similarity to the waveform formation. I don't think, though, that the way that people describe them as, and maybe that was my mistake, is using the word coupling or decoupling, this idea that they're always going to run up together or always going to run down together. That's not really accurate. And I would agree with that. That doesn't really make sense, because the overall trend, these waves might run pretty in sync at certain time frames, but they're not really not moving in sync lockstep together, which we all know. But I do think that's proportional, that makes sense to me. So this wave to me is like pretty evident. And I think that the same thing applies here in these waveforms. I think you've got the same exact motions. It's just that this is taking that higher route. And again, by the way, looking back at this, if you look at where this breakout is currently on GME, it's above that major downtrend here. Like the last big downtrend that you can look at, if you want to call it a wedge, right, on this widening, it's not quite above the last one, which would be this guy. I messed that up, grabbed the wrong point. Let me grab the right point here, which would be this guy over here. Not quite above that one yet. And that one I've been keeping my eye on because I think that's really important. And it tried to get above it recently. It jumped up over it, and now it's made back up to it. That's where some of these lines come from. But that is a quintessential like breakout point right here. Then if it goes above here, there's nothing really left in terms of waves except upward waves, because then from that point on, it's got nothing but upward waves. So that gives you like this huge amount of headroom to just kind of melt up to 32, and then continuing up, go up to 43, because the next wave would be right here pointing up. That's really important. And AMC's in the same boat. It's got the same markers. It doesn't have the same exact build in that it's not 1-to-1, but if you look at where we are in terms of, again, inflection point, I'm saying that word a lot, but I really just mean like critical moments, right? Like where does this need to make jumps, et cetera, et cetera. It's sitting a little bit below it, but it's the closest it's been in 5 months, right here. And then if you look at the actual current like outer trend, there's multiple ones right here because this is like widening out, but it is above them all. It's been breaking out of them. So again, like, are they both at critical inflection points? Yeah. In a similar time. I can't find that to be just coincidence. It's correlating. And I think a lot of it has to do with the idea that maybe they are in the same ETF and basket, and that to some degree, some of your bigger operators might trade them much the same, even if they're not really the same at all, right? Psychologically, they're not the same. And then in reality, they're not the same. And look at where this is on the big picture, right? Like, let's not forget that this generated a trend early on, and that trend is now being met here in this waveform. And that's a really clear and evident wave trying to get above there. It makes perfect sense to me that if you're going to drop, you would bounce here up and then plunge back through it. It's like textbook AMC stuff to me. And I think the same thing applies to GME. We'd have to go back and look at this timing. GME did not endure a reverse split like this in the way that we did, but I bet you going back to like November setups and maybe even looking at this guy, we probably find a similar wave structure, but again, it's not pointing down, it's pointing up, because AMC's pattern is its own pattern, and its pattern likes to do that pump with the cat ear down, whereas GME has been traditionally much higher strung cat ears. What are you talking about? Like, this is no different than GME except for one key factor, which is the last cat ears right here. So this is what I talked about the other day. This is AMC's model, which is kind of garbage, right? But it's more distributive. The GME is not any different except that when it does this, it makes the jump. So it doesn't tend to like have this crap out moment at the end because it's leaving and going above, right? So it tends to be, not always, but it tends to do this thing where the best way to describe it would be that this bottom is a little healthier, perhaps, and it goes into like a final cat ear phase, but it's like higher up. And so you have this kind of emotion instead. But the wave is still there. It's still doing much the same thing. It's just building out stronger. Well, if that happens every time, then you have these, subsequent jumps over creeks, and you're not getting those jumps, and that's what GME looks like, because you're getting these accelerated jumps over these creeks. And AMC is not doing that. Instead, it breaks down. So you get these depressions, right? Because it doesn't jump the creek. And that's the big difference. It's like this is the setup for AMC, pretty plain and simple, right? And then it just refuses to jump the creek. So there it is again. And it continues. It doesn't stop there. It just keeps going, right? And there it is again. So on and so forth. We could go into the ending there again, but I'm not going to do that. But GME does, and so it tends to have this more kind of obvious, maybe you would say it's a little obvious, but it has this more direct kind of like hop the creek, but it holds up because it keeps going up and over, and it's much more elevated. So it looks a lot stronger. The truth is, and I got to be honest, the truth is about a year ago or 2 years ago, I actually said that I thought GME looked fairly distributive. And I've said it before, I'll say it again. I don't necessarily think this all ends well for GME just because it's been more up than down. The stories of the two companies are at odds. AMC's debt laden, it's got problems, it's going down, it's being pushed down because it looks like it's going to go bankrupt, right? But if you think about the underlying stories, GME itself, the story of the company, okay, is one of relevance, and it's largely, again, very similar to AMC's in that the idea of like internet services is interrupting the business model. And you've got this guy, Ryan Cohen, who comes in, who's successfully built this online Chewy company that has just dominated. And he's going to fix GameStop in ways that probably mean closing more brick and mortar stores. That's very similar in some ways to what we see with AMC. They're both industries that are pushing towards digital. And I know they're not the same industry, but they're entertainment and media. So I'm not sure that, and so what I'm saying is like, there's like an underlying narrative to both. And one thing that struck me that Roaring Kitty said that was very human of him to say was he said, if you trust Ryan Cohen, it's a no-brainer. But the opposite of that is like, if you don't trust him, it kind of brings into question the fate of the company. What he's saying is like, there's either a light at the end of the tunnel or there isn't. And if there isn't, and it's not successful, then it's just a big gamble. So he's saying there's no risk if you really think that this is the right person for the job. He said that. It was something very close to that. I'm not paraphrasing it, but that's basically what he said. I'm thinking in some ways that if this is distribution, that, it happens in different ways, right? But I've said it before, like a lot of times you go down before you go up. But if the stock is floating and refuses to go down, if there is downside in the future, it's usually horrible, like horrible downside, right? Because we know from experience that when AMC like refuses to make a drop and it stays like elevated too long after like a distributive action, like we know what happens as a result. We've talked about it, and it happens all the time on AMC. The longer this avoids, right, the upside or the downside, it may seem like a good thing, but if in fact this becomes distributive, then it ends up making this massive drop at the end. So it may seem like it's all sugar and roses and, glittery pine cones. I don't know why that came to my head. Glittery pine cones for GME. I don't mean to be a downer on it. I really don't, because I like it. I like the stock. I like both of them, to be fair. But I also think that it's very possible that this idea that it's way strong and it's never going to come down. If it comes down, those targets are low. we found $6 and $4 targets. That is very low. Very, very low, especially if it has a push up first. You're talking about a crash. And some people are like, well, that will never happen because it's going to do the Tesla thing and just keep building on promised value, right? And it's never going to come back down because eventually the value catches up with it. That's true if that happens. And that's the whole argument with like Ryan Cohen stuff is like, well, if there is a transformation, a transformative business at the end, then yeah, I agree. I think GameStop can grow into its own shoes. If there's no transformative business, then the growth of the stock is way disproportionate to the actual value of the company, and it will have this massive correction at the end. So when we look at these, it's like, well, it's easy to say, well, GME's crap or AMC's crap because GME's better, and there's no holding a candle to the two. But the truth is not, in my opinion, is not that complex, and it's very kind of, in some ways, simple, which is that this has just been iterating like downward motion the whole while, And I'm like, yeah, that means that usually, and I say this very seriously, usually if you have this bouncing motion, that's usually much more bullish. And if you have this kind of U-shaped motion, that's usually much more bearish. And that's typical. It's just the way the shapes appear in distribution typically. So naturally, like this kind of a motion where it's like a bowl or something like that, which is kind of what we're experiencing on AMC right now anyways, this can be extremely bearish in a lot of ways. And it usually is. Doesn't mean that it has to be short-term bearish versus long-term. It just depends on the setup. But like that rotation right there, it might even have a nice huge pop at the end. I think we got that, by the way, back here. I'm just throwing it out there, but this is the exact same thing that happened essentially back here, by the way. It's like you do have this grand opportunity for a huge, huge motion at the end. GME's initial iterations might not do that because they're giving you these pops in the middle. So you're getting like a taste of something that's much, a much easier pill to swallow, so to speak. I didn't really make it proportional, by the way. So if you're looking at this saying, well, that's not what happened back there. That's not what I mean. I meant that the jumps and the cat ears and all that junk, a lot of those waves are in the same places. They're just not doing the same thing. And that's okay. One's following a certain model, the other's following another, but they actually are both made of the same parts. My biggest concern, again, and I'm just going to leave it at that, my biggest concern with GME is that the light at the end of the tunnel isn't there. If it's not there, this initial pump, which again, it looks anemic maybe on AMC, it looks much healthier to some degree on GME for us, but this initial pump could be actually quite nasty. And in the end, it's not, the end's not here yet. That's not what I'm saying. But like if this continues to go up, it's like, yeah, that looks great, at first. But what happens if, again, that's not realized? Like all of these iterations are going to unravel, and you're going to have like one of the most massive sell-offs the world's ever seen. I mean, I don't think that it's that far-fetched to say that's probably what your short operators, the hedge funds that are shorting AMC, that's probably what they're expecting at some point, and they're keep jumping back in because they're expecting it. And you guys are like, yeah, they are, and that's why they're going to get screwed. And I'm like, yeah, maybe. But if it ever does capitulate, it's going to be rough. It really is. I don't know if it will. I'm not saying it will or won't. I'm just saying if, because of the way it's set up. I just think that's a normal phenomenon. It's not gone back and checked macro creeks ever. And they're way low now. So it's like it would go back to like really low lows. And we've also talked about how the jumps that were made in September versus AMC, the jumps that were made in September of 2021 for GME, that was where it started to really build out. August and September, it started to really build out into that January run up. but it goes up most of the time. It's like squeezing the whole time. AMC does not do that, yet they still move in tandem with AMC having a spring. It's very interesting. And then GME being already kind of in an SOS mode. I mean, it's interesting because they don't seem to move together and then they just suddenly are moving together. And that's why people think that, and I think it's wrong to say that, right? But that's why people think that that AMC needs GME to run. But that's not what I'm saying. What I'm saying is that if proportionally this comes up to the top and it hits $33, but like AMC, for example, it only moves to like $3 or $3.30 or something like that, that's a problem in my book, because it could be that that's as far as that operator is going to take it. That doesn't mean that it can't go without it or that it can't have some squeeze motion. It did it here, went really, really far, but then it came back and corrected to the appropriate value. You could see something like that. And that's kind of been the general argument anyways, right? Is like, we're kind of, it sounds weird, but like people that are talking to me and like hearing me talk about stuff, you're sort of, if you agree to some degree with it at all, you're basically saying that you're expecting a massive upthrust, which is almost like a head fake, which I just said a few minutes ago is not something I normally would want to call out, but it's almost like this idea that, yeah, it would go way up here and then come way back down to what's actually the appropriate target, which is this one, that you're going to get this like hyper extension essentially. I mean, that's a pretty bold claim, Booksy. Why couldn't it just stop right there? I mean, it could. But the thing is like, I just think that the way AMC's traded presents a really compelling argument that there's other things at play. And that's why I think that this area right here is going to be retested, because it has in the past against better judgment of like, well, it doesn't have to go that high. Yeah, I know. It doesn't have to go that high necessarily. This didn't have to go this high necessarily, you know. And when you look back at it, it actually worked exactly like what we're saying, because this did the same exact thing back here. Like, it did not need to go way beyond, you know, this hook value that we see. If you go back and you look at the hook value here, and we're going to ignore to some degree this guy back in February, that's the low. But if you look at like the high, which is built on this little drop, which is the same thing I'm doing right here, essentially identical, right? You would go back and look at that and say, well, it doesn't even have to go to 350, or it only is going to go to 356, right? That's what like a standard TA would give you there if you're just doing like a basic wave, because why would it go beyond that? It doesn't need to, right? That's the full distance. It's accumulated what it needs to. It's going to, get rid of those shorts, and then that's going to be it. But you could have said the same thing back here. You could have said the same thing back here, and I think it would have been easy to argue like this doesn't need to go back above this top at 522, and you'd been right. It didn't need to. And we find out later that actually probably was the intended target, right? Like, where is it by the time it kind of gets down here as it's building out? That's where it is. It's interesting, right? Because it really doesn't even need to go beyond this trend either. Why did you think it needed to go back there then? Because it left certain things. It's like little crumbs. It left little crumbs on the table. And it's like, I'd wonder if they're going to go get them. They may not, but I wonder if they will, and that's typical. AMC does that kind of garbage all the time. So these setups might look radically different to some folks, but to me, I'm like, meh, they're pretty much the same thing. It's just that we're saying that we think it's going to extend this far and then come back down. We're not saying it's going to go to the moon. We're just saying that we think it's going to extend beyond. You guys are like, speak for yourself, man. You're on your own. You're on your own, man. In the most basic standpoint, right? If you were to use this as a bottom top, you could use this guy and you would have been right. You wouldn't have been wrong. If you had said, I think it's going to come up to at least 430 back here, you would have been right. And if you thought, well, I think it's going to try to jump up and like land in this pocket, you would have been right. You would not have been right and been really confused by the fact that it ran this high. And that's really what I heard from a lot of TA people was like, why did it need to go that high? That doesn't make any sense. And I'm like, well, it kind of doesn't, but it kind of does when you look at the way that AMC is traded and what's being gained by this, I think from a short selling perspective, etc. So I'm of the opinion that they're not coupled in the way that some people say they're coupled, like where it depends on GME. That's not really what I think. I think they're both running a race that have very similar mile markers. They're in similar spots, and then they're doing different things in between, but they're ultimately a beginning and the end time-wise that seem very relevant to each other. And they are making certain points, right? They are making certain points at certain times. And this might even play into what we see in the future. I didn't even really ever look at this. That does seem right. That's weird, huh? Freaky, even. Of course it does. I wasn't even going to do AMC today, and I found something new. Why not? Who cares? Such a waste of time doing this every day, and it's like the answers are the same every time, so you're like, well, you're either really right or everything is just wrong. I don't know. Maybe I am just wrong. I don't know. I wonder what that's supposed to represent right there. I have no idea. I don't know. If you're coming down, maybe that represents like, I'm trying to think about it in terms of like a range setup. What would that represent? If you were coming down into a range, would it represent like it's a preliminary support. So there should be like, again, like a support level there, but that's typically thought of as like a sideways level. It's not thought of as like an angular thing. But what if the preliminary support is not just that, but it's also, because of the sign of weakness on the preliminary support, it's also developing like a downward trajectory. Well, that's just like an SOW though. That's like this. That's no different than what we normally talk about, because we use like this, for example, to determine like, oh, it's a downward thing. Like after the bounce, it has a weakness, and that weakness is often followed through on with with like a creek. I don't think I've ever tried to analyze that weakness though. Or have I? Maybe I have inadvertently. I'm kind of looking over here. This is like the big picture downtrend. I think inadvertently I've done this before, because like without thinking about it, I think all of us have, because you use like these trends like on the old, I'm looking at this bars pattern. We use like these trends on the old chart sometimes in combination with, I've done it myself, is what I'm trying to say, with like these wave crosses to kind of give you like a triangulation of likely targets, and these are likely targets in the future. It's generating like a wave direction, and then it does the same thing on the flip side. But this is technically like an SOW right here. It bounced really high with an auto reaction and then came really, really low. And it could be thought of as like a spring. I used to think it was just a spring. Now I kind of think it's both a spring, like a local spring that's going to take the wave back up, but it's also a sign of weakness on the bigger picture. 269 right now, so we're below 270. That's fine. Anyways, kind of makes me wonder though, because I'm wondering why this was then used as... Why was this used as a resistance? Was this used as a resistance here? It may have been. This is just very like vertical or very, yeah, I don't know. It's a similar motion right here, this slide through. Weirdly, there's another one right there too. This is very, very similar to what we see here, this guy. That was December, January. It was like December 2021, January 2022 was that area. That was oddly similar, but I wonder, there wasn't much of a weakness there. It kind of went flat. But then again, maybe that's important. Like, maybe it doesn't always show itself with downside, but it's the same thing pattern-wise. If there's anything that I do kind of think I do well with the market, it's applying like a visual phenomenon to like a different grid, like a different direction. Part of that's just my art background. As I think about things spatially, and I've had to do that kind of stuff before. You ever see those guys that map the... It's kind of funny too. I didn't know they did this, but if you ever watch European... What is it called? I'm going to get railed for this by soccer fans. Excuse me, football fans. European football. Premier League, like those kind of matches. Stuff like that. If you ever watch those on TV and you see the stretched... It's funny because they look like digital, and in America, like American football, they do those digital ads like on the field. But I thought it was really interesting because in Europe on those soccer fields, they just do it. They just paint it on the field, but they paint it at an angle so it looks perfectly correct. I'm like, what math had to go into that? You know, they had to like grid it out and find the angle and then paint it on the field. Like that seems like a lot of work to me, but I guess it's cheaper. I don't know. But they do that with those optical illusion things too, where like the ones on the sidewalk, where you look at them from a certain angle, and it's not as complicated as it sounds. It's easier to do it with a computer nowadays because you can take something like stretch it into perspective. The hard thing about that is, so you can like have a mesh on it and like warp it. You could do that in like Photoshop or something. But the hard thing is making it match the future camera angle because you have to know exactly the right angle. So there's a lot of math involved. But anyways, it's just like grid-based transference. So you're just moving things from one flat grid to like a non-flat grid. Anyways, that's kind of what I'm thinking about here. Is like, I wonder if this is the same phenomenon. It certainly looks like it to some degree. Because you're seeing like this motion, even though it's tilted down, it's being followed through on. And you probably could argue to some degree, again, that this is maybe like a set of parallels building here. That definitely looks like the resistance. La resistance. Right there. And look at where it goes. Right to where we're thinking right now. $4. Surprise, surprise. Nobody's surprised, Booksy. Nobody cares. But isn't that oddly similar, right? Because you have the same kind of... I mean, I know I'm using like a little bars pattern, but it's just for it's just for a basic analysis here. But you have like the same concept because you have a cross coming down just like here, and then it breaks out and it rallies really high. And this looks like it goes too high, except that even here, like there was a waveform that actually went up there, and the bottom waves were pointing up that direction as well. So there's all kinds of evidence, and they did not go back. They did not go back for the check. Really similar setup in that regard. We have that here, by the way. There is a wave right here that goes right up to the top. If you're wondering, it's right there. So highly, highly similar in that regard with that pump And then the backup, this part is a little different because this holds up really high. And I've kind of mentioned before that that might be significant, except that there's a problem at the end, right? And there is a little bit of a problem at the end. But this does hold up very high. But it's like as if this had come up and like held the cat ear really high, right? And never went down, but then still built out and went up to the upside, which is basically what happened. And then it starts iterating again, which is basically what happened. So it's like the setup is just at a different angle, stayed higher longer here, and then traversed down, which is a good thing, by the way, because it didn't have some major sign of weakness like this one did in the middle, which would then position it super, 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 super low. So it's like flattening out. But it's fundamentally like the same exact thing. And this one also, I think this one was a little trickier. I don't remember using angles on here. And if they are there, I don't really know where they are. I don't remember using them to like triangulate it. I think this one maybe was used. And there's another right here, but you'd have to use either this bounce or this top. I probably would have done the same thing. So it actually looks the same. Anyways, I remember thinking it was going to take longer, and then it did. So the triangulation seemed off to me. Had you just done like the sideways triangulation that you started with, it would have been fairly accurate, somewhere in the midst of this area. None of it's perfect, but it's fairly accurate, right? But anyways, I think that's kind of interesting because that is really fundamentally like the same idea. And I wonder if that angle then, like if this angle had been positioned down like low, if we would see it much the same, it's just a different structure build out. Probably would. It's just checking things in like slightly different order than you would expect, perhaps. So the real check here would be what happened after the fact. There's no commonality there because there's no way to draw from this bottom through this top. It's basically flat. There isn't a connection with what happens in the lows in the future. At least at first glance. But what if you ignored this top and instead you used where this comes back to? So you use this point right here because it's the same point. This is like another option. And that would be like this one coming down here. I don't know. We'd have to take a look and see if that actually mattered. My gut's going to tell me that it does. It's probably correct, but let's not assume anything. Let's go to another chart. These are starting to look exactly the same. I keep flipping back and forth between them. Yeah, I bet it's pretty similar. That seems too low to me. That looks too low. I already know it doesn't get there because the other one's higher. So that doesn't quite work either. It is interesting how that angle has 3 hits though, 1, 2, and 3. And it does have a bit of a reverse, almost like a inverted head and shoulder there. You see that? I think it's really fascinating. But otherwise it doesn't ever follow through. That one probably does because it's more of like a parallel. That one really closely follows through. That's the second bottom there. So that's after it made a low. It bounces out, makes another low. And that actually works really well in the future. Well, technically, Booksy, that is the second low. Yeah. Okay. Well, I kind of proved that point then. I think that might actually be a good indication. The only other one that's there is this guy. And I don't think that's it, but it could be. It's raining. Oh, I mean, that is where we landed. That one's really good too. That's where we landed right now. That's pretty fascinating. Kind of makes this look like an inverse head and shoulder as well, right here. Almost like a micro version of that same idea. So if it went down, it wouldn't go below. Whoosh, that's really close, guys, to the same. That's kind of freaky, actually. Because then we're looking at a micro version of something similar. We're not even looking at the full comparison. That would look like it goes back down to the bottom. Again, supporting the idea it dips to like 245 or something right here. Because this went back down to that structure. Maybe even goes beneath it a little bit. So it does, again, kind of reiterate that. Anyways, and then it would like rocket, and then it would come back down. So on and so forth. I wouldn't say that's one-to-one, but whatever. I don't know. We got a little like in the weeds there, perhaps for a bit. Although it probably follows logic, because I also remember, I know I keep going on the same thing, but I remember this being really important. I looked at this several times, long time ago. It was because when we came down, I didn't do it initially. It was only after we were down here. Because when we came down, I was like, well, there's something going on here. There's a trend that's building outward, and it seems to have a lot of strength right through the middle there, and it's coming on top of it. And I just thought that was really important because it seemed like it was really very, very relevant in this, specifically in this area. I don't think I need to prove it to you. Hopefully you can just see it. What's curious about it is that when you follow it back, it doesn't look very important at first. It actually represents like a strange kind of wrap around here on like this little head and shoulder. There's a gap support right there that then drops through it. And this is the first time you get like a 1, 2, 3 lines. There's like 3 wicks right here. I don't know if I would have used it, you know, like maybe if I were using like a pitch fan or something, that's like the middle. It looks like it could be the middle of this. But I don't know. Again, how would you have known? Not sure. And I think the tools that we have available to us kind of limit us because we tend to look at one thing or the other and not all the things. It's really hard to look at all the things all at once. But like maybe... Yep. If you take the low here and the high here, that's the middle of the pitch. What does that mean? I don't know. It could just be another rule that's being used. What is that red line? Well, obviously that's just the creek. It's not really anything super fancy. That's just the 0 or the 1. It does go slightly beyond it, but I don't think that matters that much. I think that's separate anyways. But that's actually pretty highly consistent with this idea that it's wrapping itself around a new trend and then goes back and it tests the top of it. And we're seeing that proper here. I mean, it's following through quite well. And it goes back to that top. So it might be worth considering that possibility here. The similar idea going forward. I bet you that gives you a super high target though. Because there's not really another way to do it. Like if that's the high and that's the low, that peak would be really, really, that steepness would be really, really far. You'd be going like all the way up here or something. I don't know. It gets a little bit muddy, doesn't it? Like, where would you aim from? Maybe the July 7th top. Maybe just the one that we already have is the right one. Seems right to me, but it's weird. It's interesting because I took this, you may not be able to tell, but I actually took this from, I don't know if you guys can see this, but I actually took this from like a really micro snapping. So I went to the like 15 minute or something and I snapped 2 lines and then just extended them. And you can see like it's where this creek changed character around 270. And I talked about how like it broke out above it and then it changed character right here. I was like, oh, it broke out above it. But it changed character. And there's a final creek there. This is incredible to me because I really don't think I would have necessarily identified it as a cross of the wave perfectly anyways. I wouldn't have maybe gotten the same numbers. I probably could have found something similar. I've done it before. It's not like impossible to do it or something. It's just interesting that like that point and that point are actually the correct. They're correct. Like that's the right one. It goes all the way back through this resistance, this jump. And then ultimately I guess it's fascinating to me is I didn't really see any kind of connection at all with this, but that is clearly like the same marker. So it's again designating like directional input early on about where we're going to go in the future. And this is interesting too, because when it, this is where the wick is, the last like little, you can see it on my chart, the hourly, that's the last green wick there to like 697. That's the same marker. The perfection kind of isn't perfect all the way through, but my gosh, it gets more and more consistent, I feel, as it goes. So I would not at all be surprised. That's what I was saying yesterday. I'm not, these are contradictory statements, but I would not at all be surprised if it ends up landing on top of this and takes off. And it could be now, it could be after hitting like a low. It almost doesn't matter. Almost. It almost doesn't matter. It would matter to your, bank account, obviously, to get it right. But this lands on top of it and then takes off. The real question mark, I guess, is like, does it also need to go back to this low? It may need to do both. This technically satisfies both. This would only satisfy one or the other. And it'd have to go through, frankly, it'd have to be like way down here, which is possible. It could be that this doesn't happen till whatever this is, August, which is when next earnings is. And it could satisfy both at the same time, long term. And then long term, this doesn't actually ever come back there. That's another question. It's like, well, it does kind of come back to both, but not really, like officially. That would be like us coming down to like 188 right here, but never like quite getting down lower. It does proportionally look right. It's kind of where you would expect it to come down, maybe into August or something, if it were to do that. But that's also a slightly different diagram, so it's very similar in terms of the overall motion. It's the same pattern that we like to watch for on AMC, but this one has a uniqueness in that it makes those weaknesses like really obviously in the middle, which is interesting. And I'm not sure we're going to do that right now because I think that we're on more of a 2020, 2021 type bottom. And I don't think you're going to see the exact same kind of weakness. You might see a dip, but it won't be this like prolonged basin. That's my opinion about it. We'll see if I'm right. That's just me saying that the interpretation takes you to a certain stage, but then from there, you're kind of like having to decide whether you think that's going to be the same thing based on where we are now. And I don't think it is. So is 261 the local bottom of that creek? Yeah, right now it's like 265. If you look at the it's really right where we thought it should be, which is that 265. I keep talking about 265 because they used that as an anchor here, and then when we came back up, we did not go back to it for some reason, and we went to like 266, and like some people on there, they were like, no, we didn't. We went to 265, and I was like, okay, I believe you. I believe that you're seeing what you're seeing. I'm not saying you don't see what you see. But on TradingView, it just kind of hovers above it, and it did hit it in extended hours, but it didn't hit it in regular trading hours on TradingView. So that bothered me. But actually, it's above the creek now is because it jumped up. So if the wave landed on top of like 264, or it slid down a little bit maybe into next week, it could go to like 261. And that's the intersection here, which we already kind of marked off. That's what's strange is like all of this stuff is great for just, heady kind of learning, I think. And I'm learning a lot every day on this by just sort of sticking with one thing, even though it's obnoxious sometimes. It actually teaches me quite a bit because I'm learning like what to look for. And like there's some things I just would not normally look for that apparently are very important, And I'm like, huh. It makes me wonder. It does. So it's also one of these problems maybe that we don't really have all the answers. So we can't for sure say this or that, but what I mean is like I might be really close but still be wrong. And therefore, some stuff could be quite a bit off as a result. I think if you're trading it, you don't really need to have all the answers. You just need to have a generalized idea. Yeah, look at this. What the? This is the same thing. Does it go down to the bottom again? It does. I mean, I've already kind of done this, so I know that this should make sense, but I knew, like, I've done this before. This isn't the first time I've kind of gone through this, but now I'm looking at it slightly differently because I'm thinking about this wave setup, what it's accomplishing beyond just what you visually see. I think that this is largely the same. There's some moderate differences for sure. The fact that this is wrapping here but was on top of it here doesn't really bother me. But it is fascinating that that's also, again, very similar to like that peak. It doesn't look quite the same because this is a 2 hour. I just shifted it. So it doesn't look like it's hitting anymore, but I just wanted to see it. So I had to zoom out a bit, higher time frame. But like that, so it looks slightly off right here, but those were hitting on the hourly. I don't think that would have been a comparable thing. This is like a breakdown, a hook, then it goes deep, and then it goes into a distribution, and then falls through. Then we have this big push up to come back up to it, and then we come underneath it. We reject off of it for a while. We do a little distribution, then we have an up thrust. This is an awkward one. It's similar in that it came back to these markers. It's different in that it didn't go quite as high, but that's also because this diagram, I mean, it's super elongated. This is really stretched. It's strange because this is actually downward more. And so these distances are farther, but they're flat, whereas these are kind of positioned down. But it's the same idea. Like, look at where it ended up. It was on top of that marker in the end. And then it's on top of the marker here in the end as well. And so is this massive, massive upthrust. But how does this matter, Booksy? That's already happened in the past. It has and it hasn't, because we've been arguing, or I have, I guess, that this is iterative. So there's a flow to it. There's a copy, not a copy paste, but it's inset upon itself. The flow is that you're in a similar motion starting here that's on repeat, like a rinse repeat kind of thing. And we also talked about how there's a strong potential for like an upthrust using that same methodology. We've kind of been doing it right here, but I wonder if there's a way to replicate this idea already, and we're just kind of missing it. But like on a smaller picture. Well, then again, didn't I just do that? I thought I just did that. I did the like cross up thing. That'd be a way to replicate it. We just have to kind of find out where those points are. But I think we already know because we have one right there. You just have to know where the repetition starts. Easier said than done, I guess. But maybe what this is representing right here in this particular example, because we're just thinking about it in terms of a walk down. It doesn't have to be perfectly one-to-one. If it's a walk down, it's a walk down. You can just kind of interpret it that way. I wouldn't have put this one beside this one. I would have put this area beside the lower area here, and that's different. Because this would have been like the Judge Zern thing, and then you'd break down. But then this is the area that you build out. That's what we should be doing then. Sorry. Yeah, so what we should do is look at, I'm going to do it this way. So we're going to ignore the top, at least for this example, and we're going to look at this as it compared to this. And just see if the targets are the same, like that we're getting the same or similar valuations to that. I bet we are. So first and foremost, we already have this kind of downward motion, and it's quite down. I mean, this is moving away from it. So this kind of builds out across the creek, and then it drops and it builds out and it goes up, which is really similar to what we have right here. This idea that it drops down. We kind of already have it on the chart, but the idea that this drops really low and then as a quick buyback in does make sense. In this example, it actually makes a lot of sense. So we already have the yellow marker here, right there, which is this guy. I'm not sure it's going to get much better, so I'm just going to keep it as it is. And so in this example, and we already kind of talked about the possibility of not going that low, you hit like 260 instead, because there is another trend there. But in this example, it didn't do that. It didn't like bounce off that trend and go. It dropped down. So it goes into distribution and then it just drops, goes the other way. And by the way, if this had happened and we hadn't already talked about it, most people would say like, well, Booksy, you were just completely wrong, the opposite. It went the opposite way in the wrong time, blah, 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 blah. But we already knew that this was a possibility because we talked about the problem that was being presented. And we talked about it in advance and talked about how that was an issue. Here's a curiosity. Where does that connect to in the past? Because it doesn't look like it connects to much of anything. There is a lock there, but I wonder. I don't want that one. I want this one. I wonder though, because I bet the connection is more obvious. We're not going to see it, are we? There's nothing. It doesn't connect to anything, Booksy. En contraire, I think it does. Because this actually goes up to like here. I think it actually connects to this extended hour move. It's going to mess up the chart if I do this, but I'm going to try anyways. It's going to really mess it up. Because now it has to do like 2 times the things. Yup. There it is. So it goes to that wick. So it is in the right spot. Dang, man. Just like stroke your own ego. I don't know. I don't always get things right, but I'm pretty dang sure about this whole like chart shift business at this point. It's like nothing that I've done seems to disprove it. So it's like reinforcing it the whole way. So that generative trend that was shifted actually starts here. I think that is the marker for it. That was the directional input in the beginning right here, even though it's offset, because it is, and it looks like it's still using trends that already exist, which again makes sense because they shifted it down like an even value, I think, that's being used already. So it was a kind of a natural, like just grab onto this line instead of that line kind of thing, not very complex. And there's probably a lot of this parallel structure already here. This parallel probably runs through the gamut. But it's important to note, like that breakdown on that angle matches the breakdown here on the wave. I think that's very significant. And then also kind of significant in addition to that is the fact that this comes down to like near the top of it. I'm going to try to fudge it a little bit. But it comes down to like near the top when it comes back down. That's kind of interesting. So that's pretty cool. Yeah, I'm convinced of it, dude. I think 2.2636 is the magic number. I've been talking about it for a while, but I'm like more convinced now. And yeah, look, this is the same thing. We just confirmed that this is like an iterative motion, basically. Like, in my mind, like we just confirmed it. You guys may not agree, but I'm like, nah, it's iterative. And I think I was right to think that it was. And I keep saying that, but it's hard to prove that kind of stuff. Like you have to do it demonstrably. You have to like show that this is repeatedly achieving the same goals. This is good news, by the way, for those that are hoping for a pump up to near $4. Very good news. I don't think it's necessarily great news if you're hoping for like 480 to 5. I don't think it's as consistent as that. It doesn't look like it supports that idea very well. It supports a stronger notion of like $4 at this point, proportionally. But we basically just showed that and demonstrated that. Now, there's one, maybe again, this is kind of what we had the problem with, right? With this whole thing was like, there was one big problem. This is, yeah, I don't know why I said that. I'm going to take back the last like 30 seconds. There's one big issue with what I just said, because this has like a, see the M right here? This is like an M cross down. When this originally happened, good Lord, dude. It's so easy to see it now, but I could not have seen this before. Because look at where the split is on here. I get it now. They reset it here, but this now, look at the pattern. Now it's like identical. It wasn't identical before because you have two different parts. It's like, well, the M cross is super wide. Yeah, it is. It doesn't make any sense unless you take that shift into account. And then it makes perfect sense. Because look, there's like the sign of weakness right there and then the up thrust. It's the same exact thing that you have here. That's incredible. So if that's the case, then this is actually targeting that bottom. Ah, click, click. There it is. The lock has been picked. There was this kind of strange phenomenon here of like, why did we open around that value? I could not put my finger on it. Like part of me was like, well, it's close to this gap. So you're like, well, it's the gap value, right? There's this other value here that's really bizarre to me. And I mean, it's really close to all three of these, I guess. But it's like, really, it's this one. So it's this little middle LPS type deal, LSPY type deal. It's like in the middle of that drop down. I don't know how I would have illustrated this exactly, but it would have been like, if this was like a consolidation and then a drop and a hook, this would be like a consolidation right here, and then a drop, and then a hook. Holy moly. That's the same thing. So there's a little piece on that consolidation that builds on. Oh, it's there all right. $398. Why that low? I don't know if that's the right one. I'm gonna look at a couple here because there's like more than one. This is confusing, right? Isn't that weird? Anyway, we never have like seen that. We hadn't just did what we did. I don't know if I would have made that connection. I thought they were like repeating it for the purpose of just doing the back test, but it didn't sync. I guess what I'm saying is it didn't connect up in the old noggin that these actually were not disjointed in that way. Like they probably did this so they could get that drop and be in the right spot right here to build it out. And that makes perfect sense because look at where this is. So even though there's still a drop, it's like they interrupted it here. So it's confusing because they're like, you're still going down. I don't get it. And then this doesn't really look like a bottom, and then it's not. It keeps going. The thing is like they interrupted it like part of the way through, right in this little jut here. And then they started up again. So that instead of this being like where it normally would have been, which is like continuing downward a little bit lower, this is like transcribed upward. What? And then you have so that's the shift. Like you have the shift happen here, and then you have the final build out, and everything else now clicks into place. Oh my gosh. It's like exactly the same. It really is. It's like identical after that point in time. So they just laid it out for us. There's never anything complicated about it. There's a drop. This is like your hook value. This is your hook value. It happens after the major distribution. It's like going back to test whatever bottom you have. And then you have this consolidation period, but it's interrupted because there's a shift going on. So the shift makes this look super like elongated, but when you take you remove the veil, right, the ghastliness of it, right, it's like all of this looks wonky as all get out, but you can see where that shift really was intending to be taking place. So it's really fascinating to me. I don't know. I think that's crazy. So I don't know if this is the point, because it could technically be like that was the middle and then there's a last minute drop. It just goes all really far, so it's hard to say. Like how do you compress that motion by 226% multiple? Not just like shifting it, but like compressing it. I don't know how you do that. But the point is that it wasn't down where it was supposed to be. So like the valuation was like, we're not there yet. We're still supposed to go down lower. So that's why the shift takes place where it takes place here. Well, it's actually here, but you know what I'm saying. So the rest of this actually makes a lot of sense. And then when it comes back up, it goes and it reaches for that value. But we were right about that. I mean, we knew it was this area, and it's not that complicated. And I had already thought it was going to come up to like near 14. I wonder if I was using this value down here when I said that. And it looks like I was, because that's where the 14 value would be right there, right there. So it was like right in the middle, like that top gap value, which is this value right here. So that is probably not the right value, and that's 415. That's probably too high. I know we talked about 430. We saw a lot of stuff, guys. We've talked about 460. We've talked about 430. Talked about 415. But I think 415 is like me when I thought that this was going to go to 14. I thought that was where it was going to go. And that's very reminiscent. It's like right here. It's the same setup. It's no different. shoot, man. So it's just timing. Like timing's really all you have to worry about then. I'm just kind of I'm not impressed with myself. Don't get me wrong. I'm just impressed with that the shift itself disguised that move so well. And I don't know, most people probably aren't looking for like iterative things. People like fractals and stuff might see something like it, but they usually are thinking about things very linearly. And I always think about things like compressing and expanding. So I'm not sure, but that does work. And then we actually have a pretty strong intersection here, but this was one that we could use maybe. This intersection does have a three-way intersection. There's a marker at 428, and that delineates again this top and that bottom as well, and the parallel shift from the top. But we also know that that parallel shift only happened because of the chart shift. So in this particular instance, I don't think we need to draw it twice. Like you could, but it wouldn't necessarily yield the desired results, because we're assuming that this would have to happen because it happened here, but this only really applies in this particular way because of, in my opinion, because of the chart shift. So without it, you don't really need it, you know. So the point is that this did indeed go to the top of the Judge Zern thing. This is an extended hours move, so you can't see it. But it did indeed go there, and this is the breakdown. Once again, like, I know I'm saying it a lot, but to me it's like icing on the cake that this is an extension of the study that we were doing about. I think that's incredible. Maybe you guys don't, but I'm like, man, there's so much math in the market. And then the target here, if it does the same thing, should be achievable for us. That's what I want to do. So it's not just a heady study or something like that. So we got a little bit of a dilemma now, because this hits a bottom twice coming down, and this only hits a bottom really once. I won't count this because I don't think this is correct. As the second, this is not the first and then the second, because I think this is intended to be, again, with the shift in place. How did you get that shift value? You might be asking. If you weren't here back in December, there was a stream I did that we spent about 5 hours working. I feel like it was like not that long, but I think it was really long. I spent several hours trying to back. It had to do with this value. They put out this really strange value in this document when they did the last dilution. They had in their document that something about like realized value or something like that. I don't even know. Or like net value or something. It said like 10 something. It was like 1060 something. And I was like, I don't know where that's coming from. The only number that was even close to the same was near the previous bottom. But then I was like, well, let's see how this compares in terms of the original evaluation if we go backwards through the shift values. And I did that. And it was a long-winded thing. And I honestly, if you ask me, like, how exactly did you do that right now? I'd probably say, I don't know. I'd have to go back and look. But I did it, and I thought it was mathematically correct. I was like, I think this is right. So then I added that value backwards, and all of a sudden it's like, this all makes a lot more sense. It's not that this is like a true value kind of thing. The true value is still where it's at. It's that if you were to compare this chart-wise to the previous all-time low, this is where that valuation would compare relative to itself. So like the valuation here doesn't look like, it looks like it's significantly lower than all-time low, right? And it is lower to some degree, but it's not as low as it looks. Because of all the stuff that happened to the chart, this is partially just a shift. Like it literally shifted down. So if you look at market cap here, market cap there. So it's a bit confusing because I was like, why would you do this? Why would you use this number in this document? And just threw me off. So I ended up going backwards, and it worked. Not because we did like a simple math formula with like, you know, A divided by B kind of thing, but because when we went backwards and we used the formula, the two formulas for the split and then the ape inclusion, and we used that I don't know how I did it again. We found that value. So I've been using it, and this is a really interesting one. So let's go ahead and finish. I'm going to just stop there with the rambling. So we have one big problem here, I guess, in this triangulation. And I've already been doing this, so I know to some degree this might already be done. I did it here, but here's the kicker. And you guys are going to be like, well, this doesn't help us, Booksy. Well, the kicker is that this doesn't actually line up well. Like the last two intersections were yesterday. I did it like 3 different ways, and I could not find another intersection. They were all like yesterday at around 1:30 in the afternoon. Okay, that was the only one that's like reasonable. And oddly, yesterday at like 1:30 in the afternoon was really about the time we started breaking down. So you're like, uh-oh. Is it going to go the opposite way? Maybe. I hope not. But I was kind of curious. I thought, well, maybe that's just a pivot, and that might make sense, where it instigates like a downward trajectory. But that's the closest one I could find. So what we're trying to do is we're trying to triangulate. So I already did it yesterday. So I was already looking at the right thing. What we're really trying to do is we're trying to see how we could properly determine where this is going to be more exactly. I think that's a challenge. I think that's a really big challenge. We've done this like several times, and every time it's like, yeah, we get within like a week or two. I think the farthest out we ever got was like a June date, but it was like early June, you know. Most of them have been within the month of May, and then more narrowly about mid-May to late May. There's not been any significant deviation outside of those. So most of this has been fairly correct, but none of them have given us, I would say, like obviously an exact date yet up to this point, because clearly we haven't hit it yet. So I'm curious if we can still, I don't know, maybe there's something here that just makes it more concrete, is all I'm trying to say. So wave analysis does help. That's one thing. We know the general target region. That's a second thing. We have a concept here that there might be at play trajectories, which do seem to apply. We might need to use extended hours on this, because I'm wondering if that's the big problem here, is like we're not using extended hours and we're missing information. Because this does go higher than that target. It just opened there. So that could be the idea that it hits 430, but we don't actually see 430, because 430 was one of the higher probability targets, but don't actually see it. So when this went all the way up to the top, it goes to like, what is it, like 1330, I think, was the number. I think it was 1330 in extended hours. And then where does that go looking backwards? 14 by August? I think it'll be up by 1250 by August. It probably will have an extension up to 15 or so if it gets there and does the 2-year cycle. I'm going to say yes, but I'm also not sure how it gets there. So there could be some discrepancy in that. As in, like, does it hit it in August, or is it already there by August, or whatever? I don't know. Could be a lot earlier than that. Could be July, or even June, and spend more time up there going in August. But yeah, I would think the 2-year cycle is done in August. I think if it's going to do the same thing, it looks like it's on a 2-year cycle to me. It has not shown me anything otherwise. I think it's likely going to be August. But you'd be cutting it kind of close, you know. There's an earnings on August 6th. That could be a bit of a troublesome thing to work around. Does it run up into earnings? Does it run after earnings? Is there a major dump right after earnings? Then it runs up. The termination point here is here, in my opinion. Like, this is the area that you would say we have the strongest chance of coming back to. And that 2-year cycle is definitely between August like 22nd and September 5th. But in the previous 2020, 2021 model, it actually went up quite early, and then it camped up there for about a couple months or whatever. In our case, we couldn't really say it would camp very long, but it could camp for about a month. There's about a month or so here of sideways through these values. And it also just depends on where you think that is. I think a lot of people, if they looked at this, they would say that it's not 12 to 13. It's probably the floor, which is like, what is it, like 11 something or 1070 or something like that. I don't know. It's probably the previous all-time low floor, which might be a little different. In that case, the loop goes back to September 6th, right? And these are trying to push up against it. It's a matter of opinion. But August, September definitely is the 2-year cycle. There's no doubt. There's no other dates there. So between that range is really your commentary. My commentary would have to be, where do you think that is going to stop? Or where do you think the target range is? So, right. So in extended hours trading, this actually comes up quite high. So I'm going to use extended hours because, and it goes to this little lip, which, I mean, gosh, to be honest, it doesn't really look like it means much of anything. There's a little lip right here. I guess it bounced on it before it went low. That's so weird to me. So we were saying a minute ago that we think that's the second bounce. And that's, again, the lip. And I think that's right. So this is a little different. It should be a different value. It should be. I don't know if it will be. But it should be different because we picked a different mark. So there's some kind of a bounce before the drop, before that last distribution. This is confusing because it looks like it's coming down. But we should be able to find it. I think we're going to be able to do it. We're pretty smart. I think we'll figure it out. We'll figure it out. So maybe it's this idea of like support and like where that support is. It's so tricky. Support, year 1, year 2 kind of thing. Oh boy. So there is a support right there. Should I use extended hours on this as well? I guess I could. I'll have to find it again. Maybe it'll give us a little more information. It's not a bad thing if it does. I'm a little all over the place on time frames. I'm just trying to finish the thought. By the time I'm done, we'll probably be there. We'll be at $3 or whatever. We'll already be there. I figured it out, guys. It's going to hit right now. And then it's already there. It's funny. He's too late. He's too late. Oh, Mr. Too Late. Yeah, I don't know. It's hard to say. It is hard to say. So one of the problems here, I do see the ears, but so they're definitely right here. This is just an all extended hours ear, so it's kind of ugly. I'm just curious why it's there. Not in regular trading hours, but it's there. So there's a wick here. I guess this technically was in extended hours as well. And it comes down. It's so similar. Kind of hurts my brain. So it's just that low right before. There's not that many options here. There's really only like 2, maybe 3. There's another kind of area right here that has some possibility. That's $4 on the dot. So it's probably going to be like exactly 4. I don't think it's that complex. There's a difference in like space relationships this time versus last time. Yeah, but this just looks like very simply like 4 to 403. And we already had 403, so that makes sense. It's not really any different. There's another support at like 406. These are pennies apart at this point, so it's kind of irrelevant. I'm going to say 403. I'm going to split the difference. I know it could be 4. It's that simple, but 403 looks really good to me. It looks closer to this drop and some of the other supports. So I'm going to go with 403. So let's stick with that and just move on. We can't get stuck on this one thing forever. We'll never get anything done. It won't happen. So after we hit that value, we start dropping off the face of the earth. And then there's a hook. We already know where that happened. So then the next problem that we have is finding this trajectory here. I do think it's a bit of an issue. There's a question mark in my brain about whether I should use this chop as this chop with the breakout. And I think we might have to. Because this all happened at once, you know? Like you can see right here, it all happened like in a range. This doesn't happen in a range, but it's there. It's this walk down right here. I really think that might be the best practice. So that's super low. So one of these 2 points will work, but we might have to start with this one and just see what happens. And then this goes through this hook zone on the opposite side. We're not going to use this other bottom. We're going to see, because I think there's 2 here, and I think maybe this was partially that part of that setup. But I've already done that, and I know that that's not quite right. So then where's that hook area? You have 2 contenders. So this is one right there. This is another one, but this had already hit a bottom. I don't feel like it's the same. I think you'd have to use this as the bottom, but you could technically consider this area, this top, not the bottom. So those are your contenders. I don't know. I don't know why you go through the trouble of doing all this and not make it like exact or easy enough. Maybe. I like this. I like that this pumps up all the way through it and then like lands on top. And I also like that there's some interaction right here very clearly. I'm curious if you could just use like a slightly higher target if it makes any real difference. See, this one's like slightly higher. And like long term, that lowers the later target. And I know you could be like, well, what about the wicks? Why don't you use the wicks? I don't know. Maybe. I'm going to say maybe a lot right now because I'm not really sure. We're using extended hours stuff. And it's like jumbled as all get out. I'm trying to make sure I get the right thing, but who knows? There's a consolidation there on the cat ears. It seems right to me. I think that'd be a pretty good average. And then let's take a look at the others. I did not use extended hours when I did this the first time. I bet that's going to point right to that breakdown. But that's okay. That confirms in my brain something else. It does. That's the right target is important. So I think we're right about that number. I can't quite get it right. If you're looking at the lines wiggling around, it's because my snapping thing is not going to the low. But when it did, it was in the right spot. So I think we were right about that number, that particular spot right there. Come on. There. Oh my gosh. I can't get it. This kills me, man. Killing me, Smalls. Oh drives me nuts. Drives me nuts. Just go there already, dude. There. Those are the proper two bottoms on the wicks. It's clean, very clean. That's the breakdown. It almost doesn't matter which bottom you use, so we could use both. Let's make one like a different color. We'll make this one like blue. And then we'll do another one. It's basically the exact same thing. But we will use the lower wick on that one, and we'll make this one like, I don't know, green or something. It really doesn't matter. Just know that they're different targets. And then that's obviously going way, way off into space. That's interesting to me because it doesn't do that in regular trading hours. In regular trading hours, that actually looks like pretty mellow. That's the one that goes up. It's a lot less steep. It actually goes through the bottom here on these bottoms instead of all the way through it. And it does look like maybe that's end of May. If you look at where $4 is, it crosses $4. I mean, it would have already crossed. It'd be tomorrow or today. That's 408 right there. Okay, but we have another one, so we're going to use both. I hate to do this. I feel like I have to just pick one, but I don't know. With extended hours on, I'm not really sure what would be chosen, you know? Sometimes it cuts through the middle and you think that you've got the right one, but it's actually more about the wave direction. That one looks pretty good too. That's way steeper. So let's take a look. Yeah, these that are shallow, they don't hit 4 like ever. They don't hit 4 for like a year. So I don't think that's likely. I think they're important, but I don't think they're the right markers. They probably represent supports because that's what they're doing here, support and then a breakdown. But I think the trajectory of this one is probably the best. So I think we'll use this one. Not because it's confirmation bias. I just think it doesn't make any sense. The other ones don't make any sense. So this actually crosses on the 29th. So in this get up, the 29th, and then significantly earlier, this is Friday the 23rd. That's almost a week difference. Really close. These are close to some other targets we've gotten before. So one is like it hits $4 right on the 29th. The other, it's a little earlier. That's the triangulation as best as we can see it. So then what we want to do is see if there's a correlation between that and what we see again on like the bigger picture. And if there's another marker that we can use to help really solidify it. 2 points are fine. You know, a triangulation with a top, that's fine. That actually makes a lot of sense because that would be a triangulation on filling a gap, which usually pans out pretty well. But I don't know. Is there another way to kind of prove that point? I'm not sure. First, you had to identify what was actually being targeted, and we did that here. But then the problem is that you see like the one we picked out, this actually hits low. So it's like this concept of like, well, it didn't actually stop there, Booksy, based on the way you just did it. I know, and that's one of the issues here is there's no regular trading hours bottom versus other bottom is very different. So there's complete disconnect on this one, but on the larger structure, there's no disconnect. They're basically the exact same. And that's strange to me that this actually points to that other top at 461 and 485 right there. That's really strange. That's May 29th at 485. What the? Maybe you guys don't know what I'm talking about, but we actually found 485 too. It's really bizarre to me. That's illustrating like the same targets. That's only in extended hours. It's not in this. It's not in the regular trading hours. Okay. Well, timing. Timing's hard. Let's look at some other relationships. Let's not look at trajectories anymore. Trajectories are starting to give me a headache, and I think we kind of hit a dead end. It's not going to take us any farther unless I just go ham on it, and I'm not going to do that right now. There's something else here, perhaps, but we'd have to go dig through every trajectory and find one that makes the most sense. There's another thing that's kind of missing, and this is the only other trajectory I might consider. But the other thing that's missing is yeah, I think we'll overshoot 14. I do. I mean, I don't think we'll overshoot 1250, I should say. I think we may overshoot this time as well. I think that's part of the design of it, though, is you do liquidity checks as you're growing up. You don't just stop right under. Usually, don't just stop right underneath a resistance, unless there's some other reason that you need to do that. If that makes sense. All right, so we've kind of observed generally where we think that triangulation is, and I think we're right. And then we take that as far as we can, and we did. I don't think this one matters that much. I'm going to get rid of it. So we've kind of identified what we need to identify here. Now what? Timing. So one other factor in timing is like division of time. So we know this was on a Monday and Tuesday. We'll just go with the Tuesday. And for some amount of clarity, I'm actually going to use this bottom because I think we can find that pretty easily. I'm not going to use the drop-in point because, well, I guess we could. Just don't want to deal with it, but was it September 6th or something like that? So we'll just do that. So we can't do it now and draw the conclusion just yet, because then we would have to like kind of retroactively fix it. But if I had to guess, I could take this and just do a simple 50-50, right? And we do know that on the on balance volume, that 50% marker is where this is. I mean, it's pretty much right in this pocket. So I remember when we did the 4-hour on balance, we found that 50% marker. You see how it represents like the next top. So we might be able to do something like that if we can determine where that value is. How do I do that without having on balance? Because I can't have it be the exact same. Did I already do this? Did I already find the middle? Oh, we may have. I think I did this already. I think I found the middle already, because we remember we went back and we looked at it and we said it was like 3 or like 315. I think 317 was one of the ones that we found. We found a lot of those middle values. We did the on balance thing. 3 is kind of the easiest one to go after, or this like 296 area. It could be that simple because there was a cross down right there, right here. But I'm not sure. This is a little bit different for a number of reasons. not sure. See, I thought the middle value we found was like 603. So in order for us to do this correctly, I'm going to have to look at on balance volume. I'm going to have to see if I did that right. Because we had done something similar to this and talked about this setup, because the on balance, remember, it hits the same markers here, here, and here, which is along that wave. So I think that it would be unwise to ignore that work we've already done. But I cannot remember, I don't know if I did it on this chart or that chart. I'll have to look. I did it on some chart somewhere. Because I'd already kind of was working under the assumption that these were the same. I just didn't map them delicately like this. And then there's a matter of like the shift chart, obviously, and that threw me off. But now I feel like I can finish that because I didn't realize that was the case. So yeah, this is the one I did it on. So I had problems with this because I knew that the middle, at least on this time frame, seemed to be on January 4th or 5th. Ooh, that's really close to where that on balance thing, that was last year. Never mind. So January 4th or 5th. So this is saying it's on January 9th. That's not far off. That's important. You may not think it's important, but that's really important because we're basically like on the precipice of timing out these iterations perfectly. We might have to make some minor adjustments. It's still looking like Memorial Day. Maybe later. I hope it's not that much later, but so we had said originally, I don't know why this is there. This should be right here. That's January 3rd through the 9th, 8th or 9th. Where it crosses down. It's effectively the same place, isn't it? Right here. Yep. It's basically the exact same area. It just depends on how you define that. So that's actually a halfway point, not only in on balance trajectory. I mean, that's kind of amazing. It's a halfway point in the distance on the unbalanced volume here on that channel. That's also an actual halfway point for this, which I did not do before. So what I'm implying is that if you go to that date, we think maybe a good estimation is the 5th or the 6th of September, which is this point right here. So it's like that peak. I guess it was the 5th, right? But that's actually like a doubled value to the May valuation. That's hard to ignore. That's a equal part value. So that's a really significant I mean, that's a significant revelation, to be sure, because timing is the hardest thing. And if you have a pretty seriously simple way of understanding it as a division, it could be really helpful. That wasn't really where I got stuck, though. I got stuck because the current time frame is a little more confusing. And I don't know, I can't replicate this. I don't know if I can sync the OBV chart. I don't think I can. You can't copy and paste stuff in OBV, which is weird, or in anything really. But what we could do is we could at least mark off the days and that would give us a start. So first it's the 5th, then it's roughly the 9th. It's somewhere between the 5th and the 9th. It almost doesn't make a huge, I mean, you're a couple days off, but that's not like weeks off. And then it's May 13th. And those are all basically 1-to-1 timing wise. So it's pretty darn close. So how do we identify that middle? I had a theory that maybe that middle was broken down from top to bottom, and then I changed it later thinking that it may be broken down from here, which is like January 8th forward. And I'm starting to think that actually is probably correct. So my theory was that it wasn't actually like the middle of the previous channel. It was actually like lower on. And I think that's right. So I think that there's a bit of a, gosh, that unbalance is still rocketing. I think there's a disconnect perhaps sometimes in the methodology because I'm doing a lot of different things. But in this case, I think I'm right that there's a shift right there because this would not be the same. The same starting point would be here, essentially. So what we need to do is we need to take that and apply it. I've got this all kinds of backwards because I'm using charts different ways. Okay, well, I can use this as like a guide and then we'll go back. So what I need to do is find, well then copy it back over once we find it because I'm doing these on the wrong ones. So the drop definitely starts here on either the 7th, I mean, which makes sense, or the 6th. This goes back to this concept that I was talking about before, that AMC and GME are both targeting the January 6th and 7th region, and I'm pretty sure about that. And it does make sense because that was the floor. But interestingly, for GME, that's like high at like 32 to 34. It's not significant of a move. But the difference is that I think one of them, like GME, might keep going. Like might keep building up after that. It may not just drop. And AMC is more likely to just drop. So it's kind of interesting. Anyways, so that's probably one of them, the 6th or the 7th. So we'll do that here as well. Let's just do Monday the 6th because that looks more like the... No, let's do Tuesday the 7th. Take it back. By Wednesday, it's going down here, but it's kind of misleading because the OBV is like delayed a little bit in the updating. It's still up the next 4-hour session, but it looks like it's down because they're connecting the dots. It might be a day or two off. I'm not worried about it. So then the remainder is getting this angle right, and this is tricky. This is January 4th. I'm going to do a really rudimentary version of this angle, and then I'm going to leave it as it is. This is really tricky. Kind of looks like it's before then. Like there. We'll have to just say that's probably close enough. I'm never going to get the angle exactly the same without copy and paste, but we'll do it this way. It's important that the angle is the same because once I get this established on this screen, then I can just do everything relative to that angle, and it'll be approximately correct. And that it is important because this represents, in the longer term, would be where the potential top's going, which is what happened here. So we have to keep in mind that like this plays out on a bigger scale than just micro stuff. It's also like a macro thing as well. So it should line up on both And if it doesn't, that's a problem. So 33.44, 33.52, that's pretty close. Let's see if I can get 33.44. Got it. Okay, that worked really well. Lucky. Got the first one. I probably should have just done that with a channel, because I'm probably going to end up regretting it, not doing it with a channel. So when this peaked, it goes over that top, the second top, and then it drops down. But the first little hook was not that peak. It was actually after the fact. That's this one. So there was a drop, and this angle does not match, which is interesting. This is very flat. Curious. I've been thinking about maybe we stop short. This kind of looks like May 30th right there is the intersection. I don't know. We'll keep that on the back burner just in case. Otherwise, it's actually fairly correct, because this drives up through that point from the low here. So it's still following through. It just never gets back there when it pumps up again. It's very close to being that intersection back here. Same angle. Then what? I don't know. I have to still do the middle. We don't know if there's another down, but I guess it doesn't really matter, does it? Because the length of time here is not irrelevant, but it's not, it doesn't have to be exact. What's more important is where that middle structure is. So that's where things get dicey, Booksy. They weren't already dicey? Yeah, they're dicey. Oh. What are you doing? I mean, this would be the easiest way to find the middle if it's consistent. I don't know that it's definitely consistent. 27 degrees. Can you even see the degrees on this? May not be able to see it. Ugh. Okay, well, it's not going to be that off, and it should still make sense. So we're going to use that for now. It has to make sense. If it's off a little bit, this could be off, you know, a few days or so, but we know that has to make sense anyways. So right now, I'm using this because I'm trying to not be biased. I'm not going to like pick out the value first. I'm trying to use a different indicator to determine it. It looks like it's that middle, which is very close to this. See how this has like a drop down right there? That's the middle. Oh my gosh, stop. That is very close. So there's a similar motion that happens right here. My concern was that it did not dip. I didn't think that was the middle, though. I would have put it over here somewhere. And we had done it the first time. I think we had picked out 3 to 317, and this is the same area, so that's good. So we're seeing some consistency. I want to try to see if I can figure out, based on balance, though, if that's the right thing. And what's cool about the on balance is that there's also like a same price level when it came back down. So it tells you more information. Like if you saw it happen 1-to-1, but on a smaller scale, that could be really interesting. We're trying to find this little key zone here. I still think it's near 3s, but whatever. Because what I did first is I said, well, it should be double that value, which is true because this ended up going up. But it's complicated. It's like true, but it's not true. So it ends up being double the value of it if you can translate it back to language that you can understand, I guess. Um, like, this is stupid, Booksy. Just figure it out. Yeah, the price action does not look the same because in this particular example, this hits after that second low, and this looks like this is the second low, right? And it doesn't look like it's the same. You would think it'd be over here somewhere, like in this drop. It's way different. So price action is very disconnected from this on balance example if we're right. If we're wrong and we're still in this mode right here, then we haven't even made the final low. That could explain perhaps better the disconnect, because then you think that it's done, but it actually hasn't had that actual drop yet here, which would be really horrible in terms of a... That may be true though, you know? We might have to do both. We do one where we assume this is kind of the bottom, and then we have to do one where it's not the bottom, and it's going to slip back down here one more time. Because if it does slip back down and then breaks out like this is definitely not right. I don't think this is going to be the right one. So it's kind of curious. Yeah, I get a bad feeling about it. But how would you know? I don't know. I don't know. Wasn't there something else here that indicated that was the bottom? Probably. I guess if you had used this and the last point right there of the last touch right there, that could have indicated the bottom, or that middle rather. That's not much help for us right this second, but it might be one time at one point or another. Well, let's say in theory that it doesn't go up again. Does this tell us where the bottom is? Yeah. It'd be right here. So it is, we are correct in our analysis that there's like two potential lows. That's not good. Why not? Because it means that it's really long-winded. The only real implication in this is that it takes longer than expected. It'd still make the move, but it would be significantly longer because you'd take this and you'd have to move it down. Jeez Louise. And it could be like double that value, which is very slow by comparison to the other. But, you know, it may very well be the case because of the way this thing is moving. And we've been talking about the possibility, you know, that there's a problem here. It's really hard to see it with this build out, but there was another build out that came across that creek and then it came back down. It looked like it jumped. I guess I just assumed it was already done. You know, that this had already happened. There's a strong disconnect here is what I'm trying to say. There's not a consistency, which is not good. Like I wish there was a consistency, but it just isn't quite there. Yeah. Darn. I mean, this already was like that setup, but at this point, it's not, this is like already a cat ear right here. At this point, it's like a potential SOS with a backup. I think it came pretty low, maybe too low, but there is a potential that this backs up really far. Ideally, you don't want to see more than a 50% retracement. Usually when that happens, it's not very good. But GME's been doing a lot of crazy stuff lately. Like this looks like also kind of looks like a widening, doesn't it? So it's like a huge widening. So I wouldn't be surprised if it has some kind of a deep retracement. I wonder. Why can't you just know the answer? I just don't know the answer. I think the answer is exactly what I said it was, which is that it's one or the other. And if it's one or the other, and that's only two choices, then it's going to drop. It's just weird the way this set up very different than I would have expected if it was going to keep going down like hard. So I don't think the drop is going to be nearly as dramatic. This has a really steep downward motion. This is an upward motion. You know? So in theory, like if you were only using certain things, you'd probably be saying, well, this triangulates pretty easily low. This does not triangulate easily low. I mean, there are lows that it can triangulate to, but it's not like this one where it has this like necessary super low bottom. This is a little different. This has that build out, which is pretty strong. On the whole, still looks a little distributive to me. And then oddly, there's waves here that are, again, very strong by comparison to what we had back here. Like these could easily come down and hit that pocket and be fine. So I'm still thinking that this area, if it drops hard, it's kind of as low as I would go. It's subtly doing it, I think, what I'm kind of afraid it's going to do here, which is it's subtly doing that motion of a quadruple top here. There's a 1, 2, 3, and then there would be a hook for 4. Same thing happened here, 1, 2, 3, and then a hook for 4. It's disguised very well because it builds out almost like it's doing just a creek jump, but so did this, you know. And it's different, of course, because this is down and flat and this is more up, but the same motion is basically taking place right here. 1, 2, 3. If you get that hook here, it's going to drop back to that level. It's annoying because I'm trying to use the same points, but it's not really working. It's not really working. They're just not there. This is probably the best example, I guess. This is an obvious creek from the top. This was a creek, I guess, from the top that broke out. So it would, if it does this, it would go back down. It would try anyways to go back down and see if it could push below this floor. That's kind of the first test. That's what this did. And it does have success. And then it actually builds out right underneath it, like right here. And that's kind of the end of it. I mean, we know that it could be long-winded, it could be short. We're not really sure because I'm not able to easily identify that value. But let me see if I can figure out based on other things, because I mean, we're just guessing anyways, and this is one way to do it, would be like, where does that intersect? And it intersects at 296, which is logical. That looks like the middle to me anyways on this wave. It looks right. So that's a possibility. If this had like an up thrust and then dropped, it could change it fairly dramatically, you know, push it up quite high. But that might just be a change of overall, like where does it go kind of thing, not timing. Might be more of a change of price than timing. What else? Here's another problem, is that I'm using a peak, but this doesn't actually use the peak. This uses the hook value, which is different. After it did the triple top comes down and does a cat ear, 1, 2. That's really what that uses, and that gives you a better definition of where the middle is than the peak. The peak would have given you a higher value. See, it brings it backwards in time, closer to the actual breakdown, not where the hook is. We probably can find out where that hook would be without too much trouble if it does have a hook. I mean, I already kind of did it. I don't want to be like super negative about it, but it sort of already did it, because this is a hook right here. I don't think it made it on the unbalance though. So if it buys up again, it probably goes up to near this value at like 278. I don't think it's going to go way beyond it. Yeah, it's starting to look right. There's more connection to that than anything else. Here, 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 especially right there. That bounce, this breakdown. It's like a directional movement for like breakdowns. And then there's all these wicks above it. This again, we're presupposing here that there's a downward motion. So I'm kind of using what I think is normal for a hook here. So if this pushed up, this could still generate some upside before one more down. And then that slightly changes where the middle is. Not by much. Value-wise, it changes it to 295 or 294. I'm not sure this really matters. There's plenty of hits there. I think there's enough evidence to support 296, 297, and then that's still like the middle. So it really doesn't change much. It could later change long-term trajectory, or long-term targets, I suppose, depending on how you did the target. So I think we're going to have to go with the bigger one, that this actually is still going to drop and go down low, which was a reality that we've been kind of coming to grips with. This is way far out though. It's too far. See, and then this is going to go back to the way, like a critique of the way that I did this, because this motion has multiple meanings. It's a top, it's also the breakdown, it's also this high selling volume. But this has different things, like there's a top, a breakdown, and high selling, and they're all in different spots. This all happened all at once. So it's really a critique. You'd have to kind of critique, like, what are you actually measuring from? I tried to pick the on balance high, but that's not really what it is. If you zoom in, you can see it's more like when it crosses this range. So I'm sort of like picking and choosing what I want to do here. It doesn't matter on this big picture as much, because on the 4 hour, a few 4 hours is it's a lot larger, but so it doesn't make a huge of a difference. But here it's smaller. It makes a pretty big difference. Like, it's significantly different. If I go from that peak versus the breakdown versus the bottom, I mean, there's significance in that timing differences because of the smaller time period. It's quite a bit different. So as it stands, again, it almost doesn't make sense, but as it stands, this would be a Friday, the June 13th move, which is quite a ways off. That's, again, sensible if you think it goes down and it takes some time to build back out. That's really only like 4 weeks away, which is a month. But it's sensible to have downside for a week or so and then build out for a week or so and then consolidate for 2 weeks and then go. That makes sense. Most people would agree that that makes sense. It's later than expected though. But I'm willing to bet it's pretty significant if you take it from like the bottom where the selling climax is instead, which is where it really hits that low. And this is so almost negligible on the bigger picture, but on the smaller picture, it's quite impactful. This is like Monday, June 9th, maybe even Friday, June 6th, which somebody said on our stream before that they don't think it moves till June 6th. It wasn't my TA at the time, but the timing there makes sense. If you think that's the middle. Well, great, Booksy. Thanks. I'm screwed. Yeah, I'm with you. I feel the same way. It's not pleasant to change the timing. All of this is speculative, so just keep that in mind. This does kind of add up quite well, maybe to some manner of speaking, but we also don't know, again, what we don't know. We don't know that it doesn't run until the last possible second. So one thing that's complicated here also is that we're kind of trying to measure from a breakout point, but we really don't know, what we don't know. And there's times where AMC has just had these massive run-ups. It just pops and goes. There's also times where it's building out a little slower. So it largely depends on how this iteration ends. This one ended all at once. It literally took a day, or 2 days to the upside. That was it. It's much more complex if you think that this has like an up thrust and then backs up, up thrust, backs. It could take a week to get up there, easy. And usually it takes that long. Usually AMC doesn't go in like a day. It takes weeks to kind of build out. So there's complications to this as well in terms of timing, because I'm having to sort of assume that it's going to hit at a certain time or whatever. I really don't know. But I think it's reasonable to suggest that if the timing's faster, slightly faster here, it's reasonable to suggest that this goes down and then breaks out on like the 6th, the following Monday, which is quite late. I think what bothers me about this whole idea is that that doesn't even match with the trajectories we just did. So I was really hoping they would match. They did not match, which is bothersome. And it is bothersome. It's not consistent. It's not consistent. It is consistent with this middle pivot theory that we had. Remember that? We were talking about like the middle pivot theory and how like you divide it up. That's like the June area. That's consistent. It could be consistent if you use this one instead, this lower one. It doesn't look like it does anything here resembling any kind of serious, like it just doesn't look right at all, but it's close to these two wicks, but it uses extended trading hours. But yeah, I mean, if you think it gets up to 4, that's June 10th through June 4th. So there's some consistency there, I guess, if you think it's the lower one. With the extended hours on it, looked like May 28th. So the idea here is that on that buying climax, that's the earliest you could make the measurement, that this goes right there, and that's June the 10th. Still not a huge move, but and then that's the middle right there. And the middle's at 296. So there would be another upthrust if that's the case. This is kind of a bearish outlook in some ways because it's longer and it goes lower. But yeah, I think it's reasonable to say it's a little bit bearish. And again, it almost doesn't matter. Like, it almost makes no difference at all. Nothing really changes here direction-wise if you have a hook that hits the top versus a hook that just comes a little lower. They're all just a fan around this middle. It's like whether it goes to the bottom or the top of the wick. We're kind of sitting on the bottom of it right now. That's interesting. I mean, I think that's kind of unique too. I don't usually do stuff like that in that way. But using like a selling climax and then having that fan around that middle is curious because it seems to be the case that it's kind of fanning. Maybe I'm just overthinking it. It's probably just like a parallel structure in the middle. That just bonked its head on the bottom, just touched down on it. Well, no, it went through it. Never mind. Yeah, it punctured it. I just wanted to get it so we wouldn't be like late, but there's not that many places you could see an upthrust really effective here, except for like these little areas. So I think that's all there is to it. I was going to go through some of the stocks that I had like picked out that I just haven't looked at in a long time and some that I thought were good picks, but I kind of spent the whole day on this again. So sorry. It happens. So I don't think this is likely going to just go here. This is very, very tricky. It'd have to come up really far. If it all of a sudden broke to, and then the danger is still that you have like a distributive action, you know, like this could come all the way back to 284 and still be distributing. So there's just a lot of problems with this chart right now. Because I think that's very possible that they do something really, really high and it throws people off. If it does that, we'll pull this up and we'll use it. But there's like a lot of markers here. So I'm curious to see how far they take if there's an upthrust, if they take it up that high. Very curious. In the meantime, I think this does a pretty good job of kind of laying it out there. So we were theorizing that this would go down and then chop here and it would change. It could change this whole build out and yada, yada, yada. And it effectively would. You would still have a possibility of a rotation later. So I think it was a great exercise in thought process yesterday, because if this comes back down, we were thinking maybe that Tuesday it runs up. That was that 3-day weekend. Man, it could be really boring for like 2-3 weeks. If it doesn't run till the 9th, it's going to be kind of a slog. It's going to be really boring. one of the bigger questions that's going to get asked is if that's true, why would it come back down? If it's a June run up, shouldn't it just be like a June run up? And then, it's up there and it's up there for 2 months or whatever. I don't have the answer to that, except that I think that when you look at, I still think when you look at the big picture, there's no rush. It doesn't have to be there. There is a cautionary tale there, I suppose, and like thinking about it critically and just saying, well, could it do it? Maybe. I have this pretty fast, but if it takes as long as it's implying it's going to take here, this doesn't leave until June 9th or something, or Friday, June 6th even, then that's pretty slow. That would look pretty different. And I don't even know how to even draw that or understand it. It's like almost a month off from the original thoughts, but I suppose this downside would take a little while. I don't think it would be immediate. I'm just kind of lost though, because I don't understand. I'm lost because I don't understand the strength of these creeks. If the market maker is going to try to take it low, why build these creeks with so much strength, Like, why not have like drops here that are really weak? And I know we've talked about the idea that like, well, if it floats higher for longer, it drops farther. But the initial creeks here were not built with a lot of steepness. Like, they could have been like super steep, They just weren't. Instead, they're quite flat and unexpectedly so. They just don't have this last year. If you look at those original creeks here, they're super steep, They just are. The only one that's super steep right now is this guy right here. The rest of them are either the same or less, which is strange. And like, yeah, I don't know. So it's just, there's some contradictory things here that don't really work together. Like, this one was pretty obviously pointing down to that part. We have something kind of like that, like here, but you don't have it on the bottom. The bottom's pointing up. It stays high. What about that yellow line? Because that's still kind of far off. Maybe that's the disconnect. The yellow line isn't like, it's kind of crossed backwards. It's above instead of below. I think I was looking at the wrong thing. Darn it. Why does it look so wonky? Why do the lines do that? It doesn't make any sense to me. I don't understand why they would look so significantly different on different time frames sometimes. Complaining to thin air, I guess. There's a piece of this that's not quite connected. So like this makes sense if it builds out and drops and builds out and drops. It's the same thing. If that's what ends up happening, that's what ends up happening. It's very flat compared to this one, which is really steep. So there's clear differences there. But I guess it could drop. From that point forward, the differences are kind of moot. It's not the same. It hasn't even breached that bottom trend yet here. It's very strong by comparison. So it makes me wonder if, and that distinction that I was saying is that there's a really interesting little distinction here, which is that there's a disconnect. I guess this is the same in that way. There's a disconnect there because it doesn't go there, but it's not building out. What's the right word? I can't think of the word that I'm trying to use. I just sound like I'm rambling like a crazy person. I don't know what I'm talking about. Blah blah. There's a maybe not. Okay. It took a little minute, rub my eyeballs and pause for a second and just kind of exist for a minute. I needed to just breathe and get away from the chart for like a half second and think about something else. And I did. All right. So one of the maybe one of the themes that I've been kind of driving on in my head is that you don't really have to go all the way down to get this successfully. I can't say this enough because I think this is true. What we're looking at right now is an example where it does go down. But there are examples like the one right before the big drop that didn't go down. Like that's the other example we looked at. And there's an incredible amount of similarity in the regions. I mean, it's not, we did that analysis a couple days ago. It's not a question of are these similar? They really are very, very similar. And there's just very mild differences. The layups are different. The way it builds out is different. And this does go up before it goes down. It does not go down and then up. So it's a question of like, what's preferable for the operator. I don't know if it really matters in the end what we find as more likely or less likely. It's like it probably has more to do with liquidity than anything else, and maybe long-term planning, what levels will and won't be hit and how they need to be checked. So I had contested that I didn't think this was necessary just yet. I don't even think we need to go all the way down. And this supports the idea, the fact that there's, a pretty strong sense in which there's a creek here that it may not drop, sure. But also there's this kind of feeling that this is building out a little bit more sideways than maybe these ones were. And And the consistency there is not lost on me, that there was a consistency that was kind of breaking, like this makes a higher low than this one, so on and so forth. But I know distribution, and I know that it tends to be, doesn't really matter if it stays high for longer. We also know AMC has a tendency to break down when the market looks like it's running and rallying and it looks like it's way behind. As everybody always says, it's garbage. So it follows character that it would have some kind of a drop. I'm curious why it's not breaking this trend just yet. Maybe it just checked it and it's bouncing, but it didn't break it. It did break this one. That one's gone, but this is the next one up, and it just popped on it. It didn't break it. It's starting to do that thing where it's walking down layers, and that usually is right before it distributes. So there's always the sense in which that's consistent. If you go back and you look at something like this, at first it largely doesn't look very consistent. But it could be thought of that way. If you're monitoring the right things, I think you could probably find the consistencies. Like, for example, when this starts fanning outward, you could do a fan, but these pivots present themselves as their own like hooks, right? I mean, you can see the walk downs as they go through. And usually it's just, again, it starts with that ear that doesn't quite break, which is really what happened on a very small scale. It's what happened on that third motion, right? It's like that possible shallow ear right here, that shallow S-curve that we saw. And that was really like the first indication that this was maybe going to go. And we did see that on like a micro level. So it's not like wildly different. And yeah, I mean, we saw it. It was there. Right here, this is like that third motion, and it like predictably came down. That was a given. And now it's like having trouble getting back above that 1 hour moving average. Again, it's really similar to, in some ways, what we saw in some of the build out over here in March. The way that it moved and broke down. And some of the build out we even saw right here in April. We found a lot of similarities and comparisons to that. I'm just looking at this like, yeah, I mean, it makes sense. There's some parts that are more dramatic. Some are less dramatic. But in the end, when you look back at this structure, the main difference was that this has a pretty consistent, I think, if you go to the bottom and the top, you can see that it's a very consistent trend break here. And that is where it comes back to. So that to me is a little odd. There's not really a way to do that, particularly right now, where it looks kind of, I don't know, where it's like obvious. It's not there. Could be there, but it just doesn't seem to be there. And if it is, it's like super, super, super low, which doesn't make any sense. So it's hard. I get a little lost in the weeds on this one. And there's that massive push up, which is very different in some ways than what happened here, which was not like a huge, massive push up, right? So there's just some ways that, I guess what I'm trying to say is there's some things that played out here that made it pretty easy. I think it was much easier to see by comparison where the stock was going to go. I'm not trying to make excuses. I'm just genuinely like, don't see the same things. I just don't see them. This probably was the next best one right there. So that would have been like while it was crossing down. We might have something like that on the bigger picture because we've got this guy, and that's the one, like, while it's crossing down, like, that's where it's trying to go. This is kind of the best one, but it's parallel. And that's what I'm trying to stress is it's not pointing towards a singular point, it seems. It's actually holding up quite well, in fact. So it's not perfectly parallel, but it's basically parallel. I think it's that. I think that's it. Because this tries to push and then it crosses up and over. So if I were to use like 2 precise points, I'd probably pick... Well, let's try that hook value. I'm not a big fan of using the hooks, but let's try it. And then let's pick that support on May 6th. So we use the hook value from the 15th of April and then May 6th. Yeah, I mean, if it were just to go to wherever they terminate, it's going to be like $1 or something around earnings. You guys are like, I hate you, Booksy. I'm like, yeah, I know. Yeah, it's like $1 around earnings. You're like, I hate you so much, Booksy. Don't do that to me. I mean, that is where they go, but I don't think that's a very reliable marker, personally. I think it's more indicative of the fact that this is holding up differently than it is that this is triangulating somehow. Like I said, there's really nothing before. This goes super low. It doesn't match anything. Maybe this peak and this peak, which would be like these two. Oh, that's possible. Again, to me it looks like a parallel, but that one actually does sort of triangulate with the larger one in a different way. It's much closer to what we would have thought at like $2 or something right here. And that's closer to June. I wonder if we're getting like phantom variables as well. Let's go from the peak here in June, which is like 403, down to, I'm curious, down to the lows here. That's like 207. In the middle there is 289. Let's take the middle to 296. That's 217. Now we're getting pretty close to that dollar value transition. That could be more reasonable if we were going to just make a drop now. I'm trying to remember what that rule was that I came up with. Let's see what this measures out to. There was some rule that I came up with about the doubling value, but I can't remember it. Not right this second. I probably have it on the Discord somewhere. I don't remember what it was. Okay, well, after the triple top motion, there's an S-curve right here. You can see that M-cross, rather, right there. That was an indication of a halfway point between bottom to bottom, roughly. Kind of right in the middle of that M. If you use like the actual breakout right there, it's pretty close. Kind of think that's the same thing we're talking about right here. I know it's not the one-to-one, but if it were going to do it, it'd probably be that one. We're starting to see the June 4th. So it might be a little confusing what I just did, but I'm really not doing anything new. I'm just picking where I think it jumped up or cross. This case it crossed down. This is a cross, but it doesn't. It does chop high, so it's a little different. But I wouldn't normally pick that. I'd pick the where the middle of the cat ears jumps over, and that's how I do the middle from bottom to bottom. So there is some consistency there. It doesn't seem like it maybe, but that's what I'm doing. It's like this is the build out, and then this is underneath. And then this is where it jumps over. So there's a trend there that's implied. It's losing direction, potentially. Yeah, that looks like June. I mean, it kind of stinks, but it looks like June 4th or 5th. So we're starting to see more and more that might be the case. It's slow. It's only really dramatic because I think because it has negative implications, and that makes me not happy, right? You're like, well, I don't want it to go down. You can always hedge if you're worried about it. I wouldn't be happy about it either, but trying to see where that middle value was. That was like right here. That was right here. So it's really the top of that range. And then the 50-50, it's roughly 50% below. So it's a roughly 50% extension below that range. That's really low. That's like super low. That's $2. Dang. If it goes to $2, I think it might be I don't know. I think it could just be a spring. I would be really confused, and I mean, it's not impossible, don't get me wrong. A phase B bottom is a phase B bottom, and if you pump up and then dump back down, it could just come right back to the bottom again and dip a little bit lower. The fact is that if we set up the phase B bottom higher, then the dip that I would expect wouldn't necessarily go that far. But if we set it up really low, I mean, who knows, you know? It's not what you want to hear, but it's the truth. The idea is that wherever you have that phase B bottom, you're essentially going to do the same thing again. So if you think about this as like dropping through it significantly, it has to then maybe that presents itself as a change of character, you know, and it doesn't have another drop. It comes down and it makes an LPS at 3 and then takes off. It could be very different than anybody's expecting. We get this pump to like 4 and then it chills out. Who knows, man? Maybe it comes back down and there's a long reaccumulation period. It comes back down into July and everybody was expecting it to just keep going. But Booksy was wrong. It doesn't make another low. And instead, it just does an LPS right here, right? So it becomes this kind of terminal action breakout, and then it comes back up and consolidates and goes. Very possible, you know? It does not have to be a one-size-fits-all. And the thing is like, it's often the case that everything kind of works together. We see that as significant when things look like they're going to come together in a certain way. But there's probably a dozen different ways that it could go and be fine, you know. And a terminal shakeout to like $2 is kind of ridiculous. But if the on-balance volume gets low, and it's low enough, then I'll say, yeah, maybe. If the on-balance volume doesn't come down very much at all, and it stays really strong, and that's not to even mention like the 4-hour divergence right now, which is still playing out. Like didn't even know what you would do with that. So, yeah, it's confusing. There's a sense in which bears, I think, are targeting. I think the bears right now are trying to target, anyways, I should say, this low. But I'm curious to know if it does play out in favor of the bears versus like a truncated move that creates a new bottom and then they later come back. It seems like that would also be consistent with the character of AMC, which is really what happened here, if you think about it. Consider that. Now your brain is stretching. Consider that even though this followed through on the M cross and it goes low, right? It came to a new low after kind of elevating for a minute. Just like this is elevating for a minute. This is elevated for a minute. And then it drops to a new low. Okay, fine. But consider the fact that on an iterative scale, right, where our expectation is that the first low is not the lowest low. What? The first low. Some of you guys are like, it's not that complicated, Booksy. No, think about it. It's actually not that. You're right. It's not that complicated. But the idea is like, if the first low is not that low, it doesn't go to a new low until later. That's the first iteration, right? Okay, well, if the first low goes low, but then we expect that later it's going to pump up and then make a spring, like so, which completes a whole lot of different stuff, right? I don't know, actually makes sense. And then it would make sense because you'd have a... anyways, what I was about to say is, if that's true, then this is actually kind of consistent to a point. What would have to happen next is that the next iteration also has to kind of hit higher and then do the same thing. When's it going to stop, man? Well, this is basically a way of forming like a triangle, right? And eventually it has a change and these complete. The down completes, down completes, down completes. You get a spring motion. And then it's done. It's like over, right? And the last, that's it. It kind of comes up and it's over. So on and so forth. Then it just breaks out. And this is where you finally go up to, whatever level we've been looking at. Towards the top. And that makes sense. That would be a really simple way of looking at a spring motion in practice, because that's really what happens. There's a creek jump, and then there's just a bunch of LPSs up to the SOS, and then you leave. That fulfills like a 2-year cycle, right? But it's done like all these iterations and junk and built out like a really strong downward motion. But in order for this to work, if you think about it, well, one way for this to work, these are two completely different ideas. So one way would be like you're getting the double flush at the end, in which case every one of these has to be higher until it's kind of like about to burst, right? And that's where you get this kind of curvature. Like we see that already happening, but it would be like to the nth degree, right? And then you'd have this drop down. You may look at this and say, well, didn't this already happen? You're kind of drawing the exact same thing. So why aren't we just going to get the drop down and go? That's what I'm saying. I'm not sure. I would not have considered this the buy-in. I just don't think it's there. And nor would I have considered this to be that low before the cat ear thing. So there's a question of like sequential order there. Maybe it's more complicated than it needs to be, but you would take this into consideration as you're moving forward, because at some point these iterations have to change either up or down. And what I've been trying to say is I think that this hasn't happened yet. So we're still doing this, but we're doing it on a bigger scale here. And we haven't actually gotten to this move even. I don't think we hit it. I don't. I think we're in like kind of a limbo where we're doing this right here on the outset, and then we're going to do it again and then again and again. That's an argument, okay, being made. And the compressions haven't really finished yet. We're missing another big one to 4. That's been the argument. Unless they just decided for some reason to skip it. I don't know why they would do that, but just skip that. But this is actually kind of consistent in this idea that you're kind of floating up, right, until you kind of create that final drop. So that makes sense. But imagine for a moment if the iteration is to drop. That creates a bigger problem, because if the first iteration just dumps, I'm only going to do like part of it. If the first iteration just dumps here, shoot, unless you just think it's like, again, you think it's like already done it. Anyways, if that makes a lower low, this creates a problem, because now the change of character doesn't happen with downside, it has to then happen with upside. So you'd have a like an upthrust here, but then it would drive the price below the next one. This is bad. This is actually what starts the I think this is probably what starts your massive. Honestly, it looks like a beak. It starts that beak formation. Yeah. Because if there's an upthrust and then the following is a downward motion, when the heck does it stop, you know? You'd have to see a change of character in that eventually it does a bigger move up than down. And that's like a big auto reaction, and that's your spring. That could make sense. And that has happened before. This is kind of where we were in 2022. And this is why that first motion doesn't look like that big of a deal. Because then it just keeps doing the same thing. You're like, when's it going to leave? But it doesn't have to leave right away, because there's like a bajillion different creek crosses that have to be done. Because you had like one here that was like really steep. You know what I mean? This is what it really was. We had like a 40% run that day. It was way after March when we had come down. And then every one after that still had to go. So it kept like making new upthrusts. And we were just kind of going backwards and like flattening out the other way. It's very interesting. It's like the opposite effect. And then it created that bowl shape, you know, and we did this thing. It's really interesting. This would be a better one for us in terms of a phase B bottom and then creating a drop and just breaking the creek and being done with it. This one's a little dangerous. This is where we get to like that distribution model. Do we have to see, the question in my brain is, do we have to see a new low? I guess I still think the best case would be to just barely get new low. I think that would make the most sense. I'm all for just running up. Don't get me wrong. At this point, if we just ran up, I'd be like, yay, we're running finally. You know, everybody would be really happy with not being stuck here forever. But it's a little bit more complicated than that. I mean, you can have different outcomes here that accomplish much the same thing. Yeah. Part of me wonders too. One of the things I did when we came down was PTPI, by the way, broke out. I haven't heard from Jason all day. I'm assuming he's not here. He'd usually be talking about it. But it broke out. It did that cross up, by the way, like on the daily. It's like jumping up right now. So we'll see how high it goes, but it might go all the way up. It's the only one I've really been following. SPY looks okay. I don't know, man. It's kind of on its last gasp, if you ask me, but it could go pretty high on it. It could go up to like 596. Weird. The market's all kind of like rising, but they're not. Most of these other stocks are still kind of red or flat. Right. So the question I have in my head is like, do we have to go down? I don't know. The answer is a question of necessity. It would make the most sense to me if we dropped and then popped and then went down. But I also think that this could happen a lot of different ways. And one of the things I was just imagining in my brain was like, wasn't there like a reactive move that looked pretty close? We did not do this earlier, but there was kind of a reactive move off the bottom. 1330. Bared quite a strong resemblance. Not a perfect resemblance, but it bared a strong resemblance to the initial drop in. Oops. I'm not really sure if that matters that much, but what I'm thinking about is, like, let's say, for example, that we have the intended target. If we have the intended target, then we would know the bottom if we have this value. We could measure from the intended target down. The problem being that this value is, man, I don't know. It's close to, I guess it's where this broke out. If you're going to use anything precisely, it's like where that creek jump happened. I'm not sure we have that value. We can try. No harm in trying. Maybe 448. 448 seems right. It's right there. There's a big gap up and then it drops down. So I think that's probably right. We're not going to get much else. I'm not going to spend any more time on that because I'm pretty sure that's it. But it's 448, that consolidation before the big push up. So 448 and then how far does it go? It goes down to 295. I forgot about this. I used to do this with offsetting because we offset the values to the right place. You usually get it. I can already tell you right now, it doesn't look that low. Just saying. So 448 to 295. And take that down to, it's not low at all. Just 4. Only 50 cents difference. That's 263. Of course it is. Of course it is. It's 263. What is it, Booksy? It's 263. Well, that's good. That could mean it doesn't move that far. 398 is 261. Hey, what do you know? Wait a minute, Booksy. So what is it? Is it going to go down or is it going to go up? I don't know, guys. You got me. I'm just using another option. It's not even. This isn't the most scientific, but there's a sense in which this tends to work out. That this is actually like an offset move. I've done this offset measurement several times on these curves, and they tend to work very well. Very, very well. I spent a lot of time on it last year, I guess, end of last year, talking about them. So it's just an alternative form of measuring. But it's curious because even if I went to 398, which is like kind of the lowest I can go here, it's 261, which is kind of where we're sitting. I think we're right about this 260 business, guys. In which case, we may be a little off with timing, but it's confusing because of the nature of that timing being so wonky, you know. Can both things be true, Booksy? Maybe both are true. It is possible, I suppose, that both are true. I mean, we did not interact with this, largely, we didn't interact with some of the breakout kind of things we're talking about here, you know. They were just way above us. But maybe there is some truth to it, and both are true. I don't even want to get into that. This is just getting dumb, right? This gets silly. It's not because the price is turning green. Some of you will be like, oh, it's green, now he's bullish. It's not that. It's just this value. I think this value matters, and I don't think it necessarily hurts to try it as a possibility. So it does seem to me that that might be right. And oddly, it works very well with this sort of backup that we made to like 261 or 262 right here. Everything kind of lines up with this idea that this is actually like a floor. And I mean, that is pretty darn convincing that that is right where it is. So I'm very interested in that now. In the fact that that 265 kept being held up. We're probably seeing something in the realm of like an operator, either like a secret desire, almost a weird way to say it, and like an actual desire versus the other concept, which is there's more than one operator here, and some are very bearish and some are bullish. And here's what we do know. We know that this seems to be regularly kind of building out towards $4. We think that it's very likely that it's there before mid-June. We do know that 265 down to 261 is some kind of an important floor, and it's for a variety of reasons. It probably becomes like a takeoff point. But it's hard to know. We've already dropped below that, so it's kind of like, well, we've already dropped below, so what now, you know? I don't know. You know, you're right. We've already dropped below it, so there's a question mark there in my head as well of like, well, you know, we don't know what we don't know. So there could be a motion here that drops it low still. Maybe it hits like 243 and then it comes back up and then it chills out here and consolidates, and this is kind of different, and then it goes. Why not? That could work. If you're just trying to get some liquidity grab and you dump below that level and then use it, it could establish an SOW for later. It doesn't have to puncture the bottom. You know, the more obvious answers here sometimes are the right ones. And then there's another possibility, of course, of like a slump through here. It just dumps and dives. This is really bizarre to me because it goes super, super low. I'm not really sure I can buy that right now, like based on what I'm seeing on the on balance volume. It just doesn't seem that reasonable. But I guess if it broke through 260, then I would say, yeah, that's possible. You know, and even still, maybe this just hits 261 and then that's it. It doesn't go any lower, you know. It does come down one more time, but then it breaks out. And I think there's a lot of question marks about how long this takes, but who knows? Maybe it's even higher because there's still this yellow trend to contend with. And the way AMC's moved, it's been like kind of garbage in terms of like breaking levels with any kind of volume. This wouldn't surprise me either to see it just sort of consolidate up underneath. It's a little wonky, but it could happen. And there you go. Now you have your measured move and the breakout and all that jazz. You can draw a pretty accurate downtrend from August 2023 that we just broke. So that would be when the judges aren't thing happened. I wonder. I don't want to get into like mirroring too much, but these are also very mirrored. So this is across, like if you look right here, there's a there's a bit of a mirroring going on right now. I think you'd have to kind of take it a step further, but the next action would be presumably up. But it doesn't really imply that you'd be taken off to the moon. It really just suggests that you're coming back to this level right here. This is kind of the problem, right? It's like, well, it just kind of comes back to the yellow. That's my concern. Maybe that's the simplest way to look at it, but and then what? You gotta drop down. Well, yeah, I mean, in reverse, this was going back towards this. It's the M cross in reverse, so to speak. Gosh, this would be the worst. This would be my least favorite setup, probably. This is the one I was worried about, and I kept saying, I'm worried about it. It's going to go to like 3 or 315 or 330 and then just dump. Yeah. And then there it goes, right? That's a mirroring right there. There to there. That would be pitifully hard to stomach. Then the bigger question is like, if it does drop, does that mean then it's not coming back up far? I don't know. That's a tough one. If it just kept mirroring and it dropped from there, it's probably going to only go to like 330. That would be the pits, dude. I'd be pretty upset by that. That's a really wonky one, but I think I saw that before. We talked about that, like the potential that it doesn't actually come up very high, but just sort of pops a little bit. I think that was fairly consistent with the concept of parallels here, like that the parallel would only come up and basically reach back up to this top right there, and it would basically be a new trend. It flies in the face of a lot of this other need for liquidity checks, but it would work. So that'd be like after this pump, you'd hit like, you would go up, but you'd only go to like 3, and then you'd come back down to like 218. That's almost a perfect mirror. Mirror. What's that, 60 degrees? Maybe. Maybe it doesn't have to go super low, but I wonder. I'm not sure the drops are really comparable, but we could probably find out something else with this. Actually, that works really well too. I like that one. So it goes up, hits the top, hits 290, hits like 294, and then it drops all the way down by like June 4th. And it does go low. It goes like 240 or something like that. And I'd have to look to see where that is, but that could work too. I kind of like that one. That's a weird one. So it doesn't actually do a creek check. That, I don't know, man. The creek check idea is kind of tough on my brain because I'm like, that's really low. And then it hits 364, which is fine. I mean, that's fairly consistent with the hook here. So it wouldn't be like way out there, oddball target. Any kind of down would offset the value. Anything below 261, I think now offsets that value. If we were being really rigid about this, then we would actually probably already say that that value's been offset. And it's only going to go to like 370 something, which again, that's reasonable. That's like the previous top. So it's basically created like a 1, 2, 3, and then it's going to do a 50% retracement, but the move doesn't actually start at the top. It starts here on the breakdown at 450. That's a little complicated. I could probably go on and on and on. I think we've demonstrated this works several times, but there's a sense of measurement that has to happen that's like you have to do it pretty carefully. Like this is an example right here of one. You see that breakout and then down to the bottom. This is a very similar example. So there's a breakdown, it comes down to the bottom, and then by the time it hits the bottom and it breaks out again, it's like they're unloading that position or something. And there's like a mathematical consistency, right? And then you can even take that little nudge up even farther and just go to the hook if you want. And then that nudges up and goes to the hook. But there's some kind of a mathematical consistency to this motion and this motion in that S-curve. And this is not like a one-off thing. We just showed you on the big picture that works as well on this giant mush. It's like an auto reaction type deal. So it goes to follow that there's different ways to do it. I'm using a very conservative method right here to give a more conservative answer. But yeah, you could go up a little farther. So we could take that to the next step. But I just think that's a bit silly because it probably ends up going up to like, yeah, the same value, the 450 value. Interesting, right? I think that's kind of cool, but also kind of dumb. So weird. This chart is bizarre. Well, I wonder if that value matches from the top to the middle. Not quite. Almost. $365. That's freaky. It goes right to 240. I mean, I guess if you were somebody that didn't think that the market was like somewhat rigged, that might be more surprising. You'd be like, what? They picked a value, like a half value, halfway. But then this is like a shift, and it doesn't actually start until there. Does that mean that they're going to try to go below the floor that much right there? It might be. If you divide it in two, then that would be the case. 556. I don't know. We probably could just do the math, but I'm not going to do the math. Just got to draw the darn target. And then I thought you could see the label background. I thought you could see the middle. Maybe that's on a different thing. Suspiciously close. 365. Oh, that's so weird. And this is like right in the middle of that middle. Well, actually, that makes sense because I think we did that before too. Because we talked about how this value right here ends up being like the middle sometimes of the next one. If you get it right, it's like the center mark. But I have this, so it's like they're pushing it down and then setting up a range like halfway to 50-50 around it. So they push it down halfway and then start establishing like a pattern of tops and bottoms here and here. That's exactly what they do. Because they're using like defining features. It makes sense because this is already a top or a bottom. Now they're trying to turn it into a top. And this was a bottom and they're trying to like reestablish it. So it makes sense they use that measurement. But to make it a perfect division between the two is I don't know what to say about that. It's kind of a little bit odd. And then to use like the middle point and anchor it, also kind of odd. Which means that now this is a quarter. This is so weird. So now this is a quarter of the total, right? Because you can't take the halfway mark. Because that would divide this into 4 parts. 1, 2, 3, 4. So why did you think it was going to go below, Booksy? Oh, because if they're establishing contact as a resistance here, and now let's say everywhere from like 365, right? That's like the halfway point. If everything from 365 up to 15, all of that is now distribution zone. So it's like everything from like 415, it may be a little bit higher, maybe 445, because again, that's where they're kind of starting it. So that's like an extension zone right here. It's curious because now you have like an extension zone right here that matches the parameters that are set up. It also matches your expectations of like where this might go. It's a weird way to do it, I know, but it's just liquidity. And then you have below established a new middle, right? And the new middle is not actually the center of this whole thing. It's actually here around, it's anchored around the previous bottom. So you're offsetting everything now by this quarter. So yeah, then the final result would be that could be essentially exactly like equal parts below if you do it right. It's 190. Oh gosh, it's 190, which makes sense. 193. So that's the same measurements. We've been getting that 180, 190 stuff. I think we're right. I think we're right about that. So that means if you go from like 193 through the middle, you should get the peak. If they're going to do the flush. Yeah, that works because then it's 450, which is the 448. I think it's a little weird, but I actually think that's like pretty darn consistent because the idea here now is that if you look at that drop down value, I think yeah, see like that value is the same. That's crazy. That's some crazy math, man. That value is the same as the distance from. You guys are like, well, of course it is. It's the same measurement, Booksy, dummy. I think it's the same down, though, is what I was about to say. It should be the same measurement down. Yeah. Which, again, makes sense because it's like half. But it's the way they offset the valuation on it. I don't know. Do they need to go equal parts up to go down? Probably not. I don't think that's necessary. It could. I guess in the long run, we'll have to see what happens. It could be that if it only goes to 4, it doesn't actually go down to the full extension of the move. But that seems very likely going to be the place, like 190, 193. And that adds up. If you look at where that is on the bigger picture, it's where it should be, right here. Definitely works. What doesn't work is the timing, because this would mean that we'd have to be down here by June, which means we definitely would have to be running very fast if we're going to do this push up. Woo, another one. Dang, Booksy. Let's give it up, man. I don't see it. I just don't. There's too many options. I see too many things. I kind of wondered at first. I was wondering if like this is this kind of push up and then the drop. Now I wonder if this just represents that push and then the final drop. Not sure. It could. everything is going to the same silly point. This is also June 2nd. Nothing is showing me like actual, everything's kind of moving in tandem. It doesn't make any sense. Well, let's say that we're right about the move, like in terms of like the length, and it goes to the motions, and maybe we were right initially with the 28th, not the 2nd. And so by the 28th, that weekend, which is that long weekend, so Tuesday the 27th, it's like breaking out and it's going to the moon. But it doesn't go to the moon, it just goes to like $4 or something. And it extended trading hours, perhaps over the next couple of days, it does go up, but it doesn't, because maybe we don't even see parts of it, you know what I mean? We might end up seeing 450, we might not, but it's kind of there, it's kind of not. And then by the 2nd, it's actually back down here. I don't know, man, that's too fast. It's like so ridiculously fast. It'd have to move like breakneck speed to get down here by the 6th. Like breakneck speed. That's very fast. Doesn't seem very likely. That could work. DS, I'm reading it. Push to 3, major drop to 190. Yeah. Could be right about that. Because it could be like both, where you drop down here and then we don't really go anywhere very far. We just kind of push the resistance here. And then we come all the way back down. And that's where we get the spring. And then we just go. It's kind of an in the middle type outlook where it just doesn't go above the top. A lot of that would have to be, again, proved with like on balance volume. Right now, on balance volume is not really giving me any real answers. It just kind of implies that there could be a longer wait. That's all we really learned. And it's still not, in my opinion, really broken out. So yeah, this is basically what we're going to see. It was a lot easier when I thought it was simple. I don't think it's that simple anymore. I know that the price target ranges are probably correct. At least that much. I mean, and I mean that sincerely. Like, they're probably right. I would say there's a high likelihood. That's the zone, that's the zone, that's the zone. It's split into 3. Pretty straightforward. There's not really much to debate there either way. None of the methods that I've used have come up with anything quite different from 4. So the real question boils down to what do we hit first, why we hit that first, so on and so forth. And then everything else here is kind of extra anyways. There are some bigger macro trends, like someone mentioned the August 2023. There's also the trend right here at 3 right now that could present a pretty big problem. That's an intersection. That's the same intersection that we see as the June 6th date. It's currently intersecting right here at $3. So what drove me to think that this was gonna go up first? I don't think it can be understated because there's still like a sense of, like that's still there. It's a possibility. The rest of this, there's an intersection right here that's kind of pivotal on June 4th. There's a pretty clear intersection down here in this area. It measures out correctly, and that's on June 10th. We don't know if that's a pivot high or pivot low, but it's there. But we know it's there. I think it's there. It also matches with what our targets are. At this point, the biggest problem is we're just kind of out of time. If we had already gone up this week, or even today or tomorrow, and we just kind of were up there, then it'd be a little different. And the rest of the time could be spent down. It just seems too compressed. It's like you can't do all these things. None of that gives you the August 6th or the July 1st kind of build out. And I had, or the July 6th build out. And I had previously said that I thought those were pretty likely for the actual takeoff time. And that makes more sense to me if this is down here in June than just rocketing. Whereas like here you hit like a low, I would suggest that that's where you have a possibility again of like build out going into like July, for example. That to me made sense as a spring. It doesn't really make a lot of sense to me to come down here and not trade at all, nor does it make sense to do this without the rest of the iterations, So it's like it's missing that big piece. So I still think it's not quite there yet. I mean, if I had only one option, I would have to just kind of decide on what to pick, right? Like, is this going to drop and then rocket? I mean, it could, but if it does, it's got to move at like a breakneck speed and get up there. And maybe if it goes down, it doesn't go as high. That's a possibility. And then pretty much has to already be like dropping by here. It's kind of that simple. It's a bit anemic, but it would work. So it looked like a spring because it's dropping the floor. And then it just start taking off to the end of May. But then it would probably rug pull pretty quick before like a Friday or something like that. And then by the next week, you're kind of at this pivot right here, which is where we were expecting it. That would work. And then you kind of walk your way down into this Friday the 13th low. All of that's very, very fast. It's just going to get faster the longer this takes, because if it just doesn't go, and I don't know, there'd have to be some reason for that. If I had to pick one, that's kind of what I'd pick, with the possibility this does extend up, but we may not get to experience it all. I'd be interested if it did this. It'd be worth noting that this is not, again, wildly inconsistent with anything else. It's kind of the same thing I've already talked about. Like this would make the most sense to me. And that there's also a possibility, of course, that it doesn't drop hard, but I think it probably will. Like it just doesn't go that far down here and goes up farther instead. And we did talk about how this doesn't really, if you think about it this way, it doesn't give you, wouldn't need to go down that far. this gives you like a perfect hit, but we've talked about how like if you look at 2021, the OBV comes really far down, but the price action didn't actually come that far down. So another way to do it would be quite different. You use like the 12 days or so leading up to like June or August, and then you back up a little bit and then you go up high. You spend more time up top than bottom if it were like 2021, but this model is different. So and then again, there's this possibility that's just ever creeping that this does come down, but then it just sort of chills out here. And somewhere in the mix, this comes down lower. It's a much more mild kind of representation of things. And that could be like your July 11th business. And then instead of just rocketing, like if the market decides to rocket, this takes like a 20-day period or something, builds out into earnings. We don't really see any kind of major move until then. It's just another way of doing the same thing, just slower. And all of that would kind of click, like all of it works. So I don't think it's going to go with it in that sense. They're both at places where they're ready to go. Like, I think you need to understand that that's not the question. I don't think I said that in a condescending way. I didn't mean it like that. You need to understand this. I'm of the opinion that they're both already at a point where they're kind of getting ready to go. They both have had advances that are checking out certain things, so on and so forth. And there's not much in question there from me. I'm like, yeah. This jumped over here, now it backed up. You know, it's checking this guy. Okay. Well, it could go back and check these others, but it did already do those, so I'm not sure it needs to. And then there's nothing really left. There's like one more, right? It's already out of the bigger ones. There's nothing else to say. This is the only one that maybe draws my eye, is this yellow guy going down. And GME is the same way. It's already out. I know this is a messy chart, but it already came out of that bigger trend here. That's that pink line coming down. It checked that pink line right here. It went back towards it on the 6th. Broke out again, and it just backed up here. It went back down to it, and you can see like the wick. So it backed up to 27.38. In theory, it's already out. It's now out of this one now. So it's just walking up. It's like, what are we waiting for, right? We're just waiting for that SOS to kind of finish. It has to go above 29.80, and then you're probably going to have at that point like one final backup to this guy, and then it should just go back to the top. That's the motion that usually happens pretty fast. But I mean, that's it. There's nothing else there. Where is the other peak? The next possible peak is down here at 33.85, which would imply this is on a rise now. You know, like in terms of creeks, that's it. Like that's the next one. It's up here. So there's nothing else low. Like we're done checking creeks. GME just has to do one more jump, and I think it's ready to go. It has to get up here and then sit at like 30, and it should pop all the way. And if you're looking at timing, this intersects right at earnings, right at $34, $35. So, I mean, if we're going to say timing, that's already kind of where I think it to be by that time. I could scoot it over a little bit. This S curve had implied maybe even by Tuesday next week. But that doesn't mean that it's necessarily going to be perfect. The bigger S curve also suggested Tuesday next week. That doesn't mean AMC is necessarily going to be there. If GME kind of chills out until, June here, after going up, all it really means is that GME, if you think about it on a big picture scale, is that GME is now positioned in a way that it could have an M cross, where it's going to advance 34 and go. So it'd be at that approaching level right here. There'd be a crux going on. That, again, could just be an implication for us that roughly by, June or early June, the first week or so of June, first week or 10 days of June or whatever, that AMC would be getting ready to also go. But we got to remember, like, that's the moment, and this is where my stress comes in. That's the moment that I said it last time. That's kind of the moment when GME finally broke all its creeks and it started really advancing. It's very similar to the moment that we would expect right here on this M to like break here at 290, which is not that far above us, but it's also going backwards or going forwards, also the time we would break this trend going down, right? The biggest problem that I have is that in 2020, that was when, again, like AMC was really going into a downward motion for spring. It doesn't follow through with the concept of just going. And it definitely didn't do it without a spring. So I have a lot of reservations after that point in time. So there's nothing about June that makes me kind of like, okay, like we just talked about it. AMC by itself, without any kind of influence of GME, does have a lot of markers that set up right there, right around June. There's maybe proportionally one more run right here that leads up to that point, unless it just sits flat until then. It could just sit flat and then go up there at that point. But there's definitely an indication that this could be up by next Tuesday, which would imply that we run Monday, Tuesday of next week. What if GME is not doing that? Or what if AMC is not doing that? It's just chilling out down here. Okay, well then what? It kind of loses the allure of they're going to be in sync or in lockstep. I don't think they necessarily have to be. If AMC makes the cross up to here, up to 294, and it consolidates going into June, I think it's similar to what we experienced here in some ways, in that you've got the jump. It's got a strong possibility of breaking out there and doing the move. I would be questioning its ability to continue without making a new low. That would be in question. But it's possible that it just goes. I've just had this trouble imagining AMC going without a spring. And the on-balance equation doesn't really add up. Like, it's still too high. So if you're going to pump it up one more time, it would be a dramatic pump followed by a pretty gnarly drop. And that's the thing that really gets me about GME, is the idea that, well, let's say, for example, GME goes up and it's fine and it builds out its way into July. It just keeps kind of doing these micro squeezes. It seems like a far off land, but it's really not that far, right? In theory, this could take till August to do it. I think we measured it out once and it was pretty slow. I mean, if you look at the 1-to-1 with 2021, by the time it got to that top, it takes a long time. It takes like 4 months or something ridiculous. It was a really long time. I was surprised by how long it was. It could take a long time kind of walking up out of here. During that time period, that's when AMC is going down for its spring motion after September. So it would add up to, again, potentially like, yeah, from now until either July or August even. And I've got it in right here in July, but it could be potentially like from now until August, This thing is going up, chopping up through here, having squeeze momentum. It's not just taking off to the moon, which is what a lot of people are saying. Could be, but that's, again, the question of like, where does that need to happen? It's really right here. I think there's a lot of big question marks that I just don't have answers to. But I would just suggest go back and look at the original move and just consider it. This is what I'm talking about right here. This kind of like diamond shaped structure right there. It builds out the middle of this S curve, which ultimately is what propels it out finally. And I suppose to that end, I'd probably just use the highest. I mean, that's going to be even lower, but I'd probably use like the highest markers right here. That looks right. That's where the intersection is at like 55. So it would like build out that way like an S curve from the bottom here and then explode. But during that time, the expectation for AMC should be different. It should not be the same because it didn't do that last time. It didn't just build out. I'm not wanting to beat a dead horse here. I'm just repeating what we've talked about before. I know some of you guys are probably sick of the comparisons, but evidently. But the comparable region in the chart is quite different for AMC. So this had already made its build out and was starting to build out. So this is like, again, pretend it's July or August, and this is about to be now after it pushes up. That's September 2020 through January. A long time. And September is right here on AMC. It's all downside, minus the one little bump. Quite contrasting. It goes back to what we talked about early in the day is like sometimes being up might seem good, but then you have this really nasty possibility that is just building up for a bigger downside. And that was the case on AMC. So GME spent most of its time low. I mean, it was not really in a huge range back here. It has a decent, move, but it already had come back down, as you can see. So it had made its bottom, and then this is considered a phase B bottom with a spring. So it actually did a spring in, I guess, that COVID era, and then just popped up, jumped the creek. Now it's over the creek. It's just chilling out, makes an LPS, and then goes. Consistent with this idea that it doesn't come back down, which we were talking about earlier, has that floating ability. Very different from AMC in that regard. AMC first of all, was going down, but it hadn't hit its lows. It hadn't made a spring. This is not the spring. It goes back down again. So I think it's offset a little bit, and I think that this region right here is all that we're really missing. So it would make sense to me that if during this time period, I suppose one way to look at it would be if during this time period, this build out, if we go up, this is the bottom. This is close to the bottom, but it doesn't quite get there. It kind of turns from the bottom and goes up away from it to do another distribution at the top, right? During that period, GME is kind of doing its chops up for a month or two, and we're doing this and finishing like the downward motion. The timing here is kind of curious because it is fairly accurate to go from like the breakout point right here through this middle, and then it leads you to a breakout later. So I mean, you can see the motion there. This motion is fairly 1, 2, 3. It's almost even. And that breakout zone to the middle in our current time frame is something I've used quite a bit, and it's an interesting one because you kind of have to know where the middle is. And you're like, well, you have to know that, right? Yeah, but I mean, this is the best, most likely middle. So it implies that July 8th is actually when it takes off, not June. Repetition. So June is a real big fake out month, basically. And the first portion of June would be up, and then just really all of June would be kind of down. Just kind of props it up into June, and then the rest of June is pretty much down until right at the end, and then it starts building back out. That would be more accurate, in my opinion, a depiction of the spring. You might think, and I guess this is like kind of the biggest question mark in my head, is like, well, why would it break out of 3 early? Why not just do this like pump right here and just barely pump it up? I think again it has to do with on balance. I suppose if I were to say one of my bigger concerns, I've said that multiple times, the $3 mark is a concern. And I really do not want to spend all day on AMC. I'm kind of irritated with myself. I'll try to do better tomorrow if it's boring. But one of my bigger concerns is that it's kind of like going up, but not, the price isn't really moving. It makes me worried that they're going to use something else. Like they don't need it or something. They're going to drive the price down without taking it up very far. That would really bother me. It'd be really inconsistent with 2022, or excuse me, 2020, but who's to say, right? It has to be consistent. It doesn't. Anyway, it's kind of a mixed day on the market. Some good, some bad. This didn't actually end up going really anywhere. It's kind of right where it was when it started the day. It was at like 17 or 18 cents. Seems like it's having some trouble. Went up to like 1945 or something, but S&P's almost at 0. It's at 0.3. If it's up, just barely. This looks like a hook right now. We'll see if it builds out again. I don't know. Most of my watch list is probably the same today. Fang's down 2%. MPW's up to $5. Wolf is down. Everything's kind of the same. I did play Coles, so I'm in Coles. I don't know how long I'm going to be in that play, but I'm in it. Starbucks looking kind of shifty here. Wonder if it's done. This is coming down. This is kind of rounding off. Might be. There was a yeah, it may need to come back and check this region here. I mean, it adds up. That would make sense. I think the creek kind of boils down to being right here. It's pretty straightforward. Before it goes over the top, which it hasn't yet. don't mind that rounding. It's just one big little wick down. I think it's ready to go. Might give it enough momentum here. Just kind of drop right there and then make that rebound. I should just go. I jumped the creek, so if it doesn't go, it's going to die. Like, it's going to be bearish is what I'm trying to say at this point. It definitely jumped its creek, so I think it's going to go pretty far. I've had 95s for a while. I think it'll get close to that. I just kind of have that since it's the bottom. But as the widening goes, I mean, it should head back towards 110. I'm not really worried about TLRY. I'm not really worried about long-term AMC just yet. I think it's going to go up to 2020, up until 2026. If by 2026 it doesn't ever make another high above like 13 or 15, and we're sitting here into February, March next year, I'm not going to be holding on to hope for unless there's clear evidence it's going to go. But that's just something that long term, that's where the wave ends, and it's decently high. It's at like 45. It's back where that gap is. The shift didn't hurt it. It hurts it in some ways, but it doesn't in other ways. It's complicated. Valuation wise, doesn't really hurt it, but the visual on the chart looks worse, I guess. Yeah, I think this is going to go still. I think it'll cool. I think it probably cools off. I don't really know because SPY is one of those tickers that can just kind of keep going, but the widening itself does go to like near 600, but it's more like 596, I guess. So I wouldn't be surprised if it stops a little short. Could it already be there? Maybe. Maybe. I don't know. To me, that area is, you might as well say 600, so who cares, right? I don't think it has to go there right now, though. Like, if you look at this as a 5-wave, there's certainly a room for a cooldown. This is a 1, 2, 3. That already reached up pretty high. It could have that 4 and then come back up again. There's a few creek levels that we just never checked, or we haven't been back there. The supports, rather, running underneath it. These two are really important. There's 2 bottoms here that haven't been checked in a long time, and I don't think it's going all the way back down there. I just mean, like, on a trend, it would make sense to at least come back to that at some point this way to like 577. So that 577 is an area you could get another boost, but I'd still consider that potentially part of, maybe potentially part of 3. I'm not sure. I guess I'd have to look. No, I guess it wouldn't be. So that's one. You could have it go down and then pop right back up. But wave 4s are typically pretty long, so if it's a Elliott wave, that could go down into May. Breakout. It almost doesn't make a huge difference to me, but I'm not trading it right now. Um, the only time I'd probably trade it is if maybe is if this moving average dropped or something. And or if it comes back down to like 550, 560. I think if it came back down to here, I'd probably trade it up. I'm just not really banking on catching a move like when I don't fully understand where it's going to go next. I was very bullish on SPY at certain times and it paid off, made good money on it. Right now, I'm a little bit meh. I think it could use a cool off. We also don't know how long it takes. I'm kind of making it go straight down, but it could take some time. You know, there's another one right here that I drew that was like sideways until next week or something. That would be consistent if AMC pops during that time. That by June, when this is like hitting a peak and starting to turn down, maybe that AMC's already on the downward track. That would be very consistent with the bigger macro version of things during the run-ups. This is like COVID bottom. And then right here in April, that's like the SOS right there after COVID type bottom. So if you think about it that way, it's actually pretty similar because there's a build out here with a big drop. And then during this time period, this is already breaking out and heading up towards all-time highs. AMC's not moving, kind of peaks and dies. And it's not the same exact thing, obviously. There's some key differences. Please don't hear me saying it's the same thing. It's not. But, you know, it would be consistent is all I'm saying with the idea that it runs a little late and then it's done before the other's done. It's so micro that that's a bit silly, but it's not impossible. I think the biggest thing that would spit in that's face is that this was going down in December, not, and that's not synced up. So you can't really sync it up later just because. Well, actually, no, that's about right because this is February. So by the time this hits the top, AMC's already going like down. Like it made this big run up like late in the game and then starts crapping out. When did it start that run up? October? Everything's about AMC. I'm just curious. Let me see something real quick. That's interesting. It's kind of similar. Even the ranges are kind of the same. This move right here and this move right here. I wonder if there's a rising iterative model there. Maybe this just has that little mild backup and then it goes up again and flattens off, tops off. That would be iterative, and then it could have a drop here to here. I'm looking at this and this. I'm like, yeah, it's pretty much the same. It lacks some pieces, but whatever. It's a similar area, is what I'm trying to say. You look at that buy-in here and the buy-in here. The zone is not wildly different. Anchor's on the same area. And then buy up to exhaustion and then start just crapping out. Maybe even more so here to here. And here to here. It's just one rapid fire iteration of the same exact things. That's really bizarre. Even that's kind of the same. That's weird, man. Do we think that's weird? I think that's weird. I think that's really weird. It doesn't quite look wrong, though, does it? It's like doing the same exact thing. What in the world? Yeah, what? Sorry. I didn't notice this, and now I'm like, what is going on? Didn't go quite as high here, but the order in which it hits this is really oddly similar. Like exactly the same order. That's really, really weird. Is this normal for SPY? I don't know. Yeah, it goes blue, yellow, pink, pop, then orange, and then go. The only difference is like where it goes here. That's it. This area. What the? If you don't know what I'm saying, I just started looking over to the left and I was like, it looks like the same thing, but compressed and narrower and smaller. I think this is going to be really bad. Maybe really good first, but it's not that's not a good sign. It's exhausting itself off the same markers. So it's just doing the exact same thing again. Yeah, and it's even got the same like targets now in mind for the tops, so because that's where it broke down. Beat, 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 beat. So this one's missing. So it's missing this beat. It went up to 580 area like it did back here. This is weird because it kind of jumped over it. It didn't really use it. So it could find support at 585, or it may need to back up to this 571, which oddly is this gap zone here. So if it hits 571, I think that could be like a buy. Because that would be like coming back down to that floor. and checking it. And then it could go from 571 up to the top. It's hitting the same beats, which are very, very odd. It looks like buying off of that floor, though, would be a good idea for now. If this doesn't get as high, then you can shift it all down a little bit. But otherwise, it's been hitting the same drum, the same markers, which is fascinating. AMC's at 279. It's making a little move. Yeah, this is weird. It would make sense for this to come back to 577, I guess. At least. There might be other evidence for that, but for now I'm just going to put a marker at like 580. And then that region could be a buy order region. That was kind of consistent with this guy, which would dip down there and then just go. What a mess, huh? And once it does that, it's in this pocket, then it can go up. And it's finished. Probably makes a massive double top. It's similar in that it have to break down. So you could still get a 4-5 maybe. Have like a breakdown right here. It comes low and then goes up again. It's the same motion. I guess I already drew it, but it wouldn't necessarily go higher. It could go higher, but it doesn't necessarily have to. We'd have to look back at the other side and see. But I'd be really curious if it does this and then maybe it goes a little bit higher, but then it like capitulates again really bad. It does like the same thing. That's July. Yeah, so that actually does make sense. If this kind of stops short and then by June it's dropping and for like 2 weeks or whatever, it dumps down again. And then oddly, I know it sounds really bonkers, but I guess if you did it again, or maybe vice versa, maybe it does it earlier than that and it actually goes up. So this actually starts earlier. That would explain this fragility on the bottom, like it's super fragile. This could be a great year for trading the market if it does stuff like this. I wouldn't know about this top, what else to do here. You just kind of have to like watch it. But I don't know, either that's going to be July 11th or it's going to be way ahead of time. And I don't know why it wouldn't do something kind of similar here with that drop. Actually, that's the April 2nd drop, so maybe that's where it is. It's like another April deadline. That would make sense. So it does the same thing. Because they already did it once. Just rinse repeated the same markup. And then if it's really bad, it's like over. You might get one more pump, like a hook. Who knows at that point? That's a little far off for me. Yeah, you could get like a hook here. And then just kind of be done with it. Dumps. No, I don't know. I don't know what happens after that. It's too far off. But this is hitting the same beats, so I think it's going to do the same thing. There might be a little bit of an extension here, and then that would possibly indicate that it's going to kind of pump up into the future. So if this leaned upward, you could have another one that kind of goes up a little farther, keeps pushing up, right? So I don't know about that, but not yet. So if this were to, like, what I'm saying is if this were to breach upward and like kept going up towards that July area instead of the opposite of like topping early and coming down into the July area, and it's a bit different. The directional input matters, it's positioned. I don't really want to root for the market to dump like that, but if we see the same thing happen, I'm going to have to just trade it. Maybe it's not that dramatic, but we'll see. So where did AMC come back to when it dropped? It went down to like a 30 minute or something. I need to clean these charts up. We need to like pick one. Stick with it. 1, 2, 3, deep drive, 4. Yeah, this is kind of your last chance to, and it did break. All right, so I don't know if I missed it or just misread it, but it broke through that. So it dipped below and went to 267. I think I just missed it. So it broke that one now. So it's fanning downward. And this is coming back to reach the previous fan. In order for this to break out, it's kind of obvious. You can see the marks very clearly. It would have to like break here essentially. Like this is exactly the spot. It'd have to jump up and over all 3 of these. 1, 2, 3, and then 4. It just doesn't seem very likely. And I don't like keep moving my thing around. It's probably better just to wait, I set an alert for 285 just to know when it goes over the top. I'm doubtful this happens right now. This was kind of expected. So if it comes back through 271 again, then I think it's reasonable to expect that we're going to hit that 260s area very quickly. It's like here instead. I don't know about the rest of that yet. I don't know what to say if it jumped over, guys. I would be very like, wow, because it just doesn't usually happen. It would have been like if back here, when this came down low and hooked, instead of just like stopping, it just like rips up through. It's just not that normal to see. I'm not saying it can't happen. I would not have predicted that kind of motion. Now the motion here does look fine. And we looked at that on the other chart. I think it was like that. You could see some kind of a wave here that jumps backwards. I just don't, again, I thought it was going to come lower if it came down to like 265, or 265, 261, not 267. That it would need to like creek jump. I guess it's not on that one either. I don't have it anywhere anymore. I did though, but whatever. So this is like a resistance right here. You can see it, that yellow line coming down. It's also partially like a moving average. And so you can see like the first move, this could be like, I think I said it yesterday, this could be like a double M, and it is. And then this is the creek, and that's what I had drawn out. And I said that's a really interesting number because it goes all the way back to the beginning of the formation of this whole thing back in August of 2023. But I was saying that this could be like an M cross but it just looked like it went down. So I was like, I don't really know what else to say about it. 1, 2, 3, and then it like crapped out, right? And so it looked like it was just done. I think we drew one. I think when I did this, I drew an example of like an S-curve shallow here. Actually looked kind of like that. Something like this. And then it did this other one, and I was like, I don't know what that is. But that's what I was saying. Like, it could technically do something like this, but it would have to then like break all the way up and over. So if this just hooks and drops, I think it's going to start going low, at least towards that 261. Kind of the same thing we experienced right there yesterday on Wednesday. I'll come back if it does that. Otherwise, I'm done. Sorry. I blew today up with all this other stuff. So I apologize. I feel really bad about it. Like I genuinely do. But I don't have time anymore. So I need to do other things. So I do apologize if you feel like I wasted time. I did not intend to talk about AMC. Sometimes it just gets its hooks at me, I guess. And I just kind of went with it. So I wish you all the best. I hope you have a great afternoon. If we explode, I'll come back. But my expectations right now are kind of low. We'll see. This is a mighty hook if it's a hook. And if it's a breakout, it would be like ridiculously cool. But I have to... I mean, it's not that off. We did say Wednesday. I just think it's done. Like, I don't know. I don't feel like it did it. So, didn't cross up. You're like, no, it's going to do it. I mean, if this bounce is real and it pushes over, yeah, then that looks really good. If this bounce is not real and it doesn't push over, it's just a hook. And it's going to come down pretty fast. So, we'll see. I appreciate you guys. I hope you have a great one. And I'll talk to you later.